All right. Hello, everybody. Welcome back to another episode of the Market Open. We are here live back in the beautiful Bay Area, California. It's been a while since I've been here, but we are back and it's early. It is 5:45 a.m. Eastern Standard Time. By the time the market open is going to be done, it'll basically be around 8:30 a.m., which is insane because at 8:30 a.m. back in New Jersey, I'm like prepping for the market open. So this is going to be life for the next 10 days. We are in this Airbnb. As you guys can see, it's actually a pretty decent Airbnb. They got a smart TV, they got Wi-Fi, they got water, they got kind of all you need, Wi-Fi, water, and a TV with YouTube. So we are good to go. And we got to open up the markets. You know, I actually feel kind of relaxed waking up this early to do the market open. I know when it's over, it's going to be like the day's just getting started because it's only going to be 9 a.m. But still, it's kind of nice to be up super early. It is kind of weird tracking the markets because every time I see 5 a.m. and then I see stuff going on in the East Coast, I'm like, what is happening? But nonetheless, we are here and we are live. This is going to be a very, very special week. We got a ton of stuff we're doing today, meeting some people that you guys are probably going to like. I'll be tweeting about them. So Twitter in the description. You guys will see some tweets of me meeting some people that are pretty cool. I think the market close is going to happen with Jason. So Jason's actually nearby in California. So I'm likely after I meet with some people in the morning going to his studio. And more likely than not, it might be like 15, 20 minutes late, but it might not start exactly at 3:45. There will be a market close. So market close with Jason will be super, super fun. And then after that, tomorrow, also going to have some fun stuff that you guys will see soon. Wednesday, we got Robinhood earnings. Thursday, we have the meetup. For those that are not part of the Telegram group, I am putting it in the chat right now that that group is officially live. So I'm putting that right here. And if you are in the Bay Area, it is Thursday, February 13th. Thursday, February 13th, we are doing the meetup. Today, you will get a text in the group chat on where the location is. But if you want to join, then that is there right now. And yeah, that's it. It's going to be a pretty fun week. And then Saturday, Sunday, and Monday, I'll be at Berkeley on the campus because I'm coaching some of my kids for a debate tournament. So if anyone's nearby on Berkeley, I'll be walking around campus and you can walk up and say hi. All right, here we go. It's time to get into this market open. Good morning, good morning, good morning. Thank you, everybody, for being here. Blake, June, Philip, Zocold, what's up? We got the Warriors hat, baby. We got to rep the Bay. I got a Steph Curry jersey as well. So, you know, we're going full on California today. Krupa, Monica, good morning. Eagles. Oh, yes, Eagles. Yeah, Super Bowl. So I was on the plane yesterday. I didn't really pay that much attention to the Super Bowl, but then I fell asleep for like the first 2 hours. I woke up during halftime. And I found out two things. Number one, people really hated the halftime show. I mean, some people liked it, but I think a majority of people hated it. Number two, the Chiefs were down 24 at halftime. And I was just like, what? Like, I did not expect that. So I thought the Chiefs were going to win, dude. I thought it was going to be a three-peat, but it wasn't. So yeah, nonetheless, wasn't the best Super Bowl for a lot of people, but still was, I guess, great for the Eagles. K-Dog, Gene, what's up? Crowd Control, Patrick, I'm Beneficial. Michael, good morning, good morning. Colin, thank you, everybody, for being here today. Chad, what's up? Emmanuel, Ty, Eeyore was right, Inbound, Raul, Dougie, Ozma, good morning to everybody here today. All right, I think let's get started. This Airbnb goes on the list of weird places I've done the market open from. You know, I've taken a picture every time I've done the market open from like a different location. I'm going to post them one day. There's been like at least 6 or 7 different places in America. Now we got to do this internationally in the summer, but that I've done the market open at. And every time it's just, we continue to do the show, even if it's in a different location. As long as we have a mic and camera, we're able to get the job done. I didn't set up the good camera. I might set it up tomorrow. It's just right now the lighting here is not the best. So might just go with this camera for now because setting up the bigger camera would be a little bit too much here. All right, good morning. Let's get into the show. I think we gotta start with the Super Bowl, and we'll get into. I know Hood's going crazy, dude. I was on the flight yesterday. Hood's up 3% right now. I can't explain it, dude. I was on the flight again. I slept for the majority of the first 3 hours. I woke up and I had Wi-Fi on the flight, so I checked Robinhood, and I was just like, oh, this is like, I don't know why this is happening, but this is happening. 57.59. At one point, it was 59.89 in the morning. I don't know. It just, like I don't know why it's going up. I guess it's a little bit of a pre-earnings pump. but my net worth increased substantially while I was in the air. Which brings me to my first topic, actually, before we get into some of the macro stuff. I am tired. I'm really tired. Like, I'm really, 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 really tired of sitting in the back of the plane and not having first class. I mean, I was sitting at 53G, and there's the proof right there for those that don't believe me. 53G in the back of the plane. This is the Super Bowl score. Couldn't believe that either. 34-6. And it's getting to the point where I'm like, you know what? I don't have the money to pay like thousands of dollars for a first class flight. But when I do get the money, that's what I want to buy. I don't want to buy a Rolex. I don't need to buy a Lambo. I don't need to buy any. I just want leg space and the ability to lay back. That's it. Because when you're walking by first class and you see all these people so comfortable and you realize you're going to the back and you're going to be twitching the whole time and trying to just get your position, barely being able to sleep, you realize, you know what? Some things are worth paying for. Some things are worth paying for. And so I don't have the money to do it. Also, I'm not willing to dish out 100 hood shares just for a flight for 6 hours. But still, it is one of those things where I'm getting to the point in life where I just want to be comfortable on a plane. It was literally like my 500th flight yesterday, or maybe even more. I've been on so many flights, never flew first class. I think one time I got upgraded to business on like a 2-hour flight from Georgia to New Jersey. And the lady brought me shrimp. I was like, what is this? This is crazy, bro. But I've never had first class. And I think hopefully in the future it's time. But I know I'm not going to be able to live with myself. Like, I've got to have FU money to do that, like real FU money. If I don't have FU money, there's no way I'm going to be able to justify that. So hopefully we're able to do it. All right. So let's start off with some macro. I saw these two stats yesterday and I thought this was really interesting. The Chiefs winning is actually, the Eagles winning is actually not good for the stock market. So when Philadelphia wins a World Series or Super Bowl, bad things happen. Last time the Phillies won, the Sixers won, the Phillies in 1980, we had a double dip recession in the early 1980s. In 2008, the Phillies won the World Series in baseball. We had a financial crisis. And then in 2018, the Eagles won the Super Bowl and we had the worst year since 2008. So, the Eagles winning is not, or the Philadelphia sports winning is not necessarily the best for the market. Look, you could disagree or agree with this. This is just like the facts in terms of what has happened historically with the correlation of Philadelphia actually winning anything. However, futures were red last night and they flipped green. And one of the reasons they might have flipped green is because blowouts in the Super Bowl are very bullish. So every time we've had a blowout in the Super Bowl, talking about a median point difference of about 20 points, which is basically what happened yesterday, markets go up on average a year from the Super Bowl by 13.6%. So although Philadelphia is like not the best for the market, again, that's just historically what has happened. Maybe the blowout kind of fixes that. And the fact that they won so decisively. I mean, dude, it was like, I have never seen the Chiefs get blown out like that. And in the first 2 minutes, I think the ref made some call and people were complaining that the refs were cheating again to make the Super Bowl, to make the Chiefs win. Well, that didn't happen. And Philly ended up winning this in pretty just astonishing fashion. So there you go. That's a couple of quick macro stats in the context of what we got for the Super Bowl. Now, what actually happened yesterday in the context of macro? So China's back with tariffs, and I thought this was actually going to turn futures red, and I mean it did, but then I still don't know why futures went green. I don't really think it was because of the Eagles. I think it was the market just not caring. So beginning Monday, as reported by the Financial Times, China will implement tariffs on up to 15% on 14 billion of U.S. exports, including LNG, coal, crude oil, farm equipment, and select vehicles. And it looks like they're fighting back against the sort of universal Trump 10% tariffs that he put on Chinese imports last week. Now, at first, glance, you may see this and say, oh, it's only 14 billion. This is going to be a nothing burger. Yes, this is definitely a nothing burger. And I think that's why the street changed their tune on this from red to green. However, it's not really about how many tariffs he's putting or on what goods he's putting tariffs on. It's about the rate of escalation that is happening with China. And I think that's what people are a little bit more scared about. So Trump's going to respond to this. By the way, Trump is having a press conference at 1 p.m. on more executive orders that he's going to be signing. This guy has signed, I think, 54 executive orders so far. I don't know what the executive orders are going to be about today. He did sign an executive order yesterday to officially name the Gulf of Mexico to the Gulf of America. So that did happen. But the point is, if he responds to these Chinese tariffs with even worse tariffs, which I don't know if it's worth it given these tariffs are so little, but again, we're gonna have to see what he says later in the week. That's when we can get a potential escalation into a trade war. And again, we saw a full-on trade war happen in 2018. Quite frankly, the Eagles winning in 2018 was not the reason 2018 sucked for the market. It was down 4% for the year for the S&P 500. It was because of the trade war. And so I would imagine Trump, given they're already doing so much, it doesn't want to escalate this further, I would hope. But that is going to be one of the macro things that we definitely have to pay attention to this week, because it is going to determine the extent to which how bad these tariffs end up getting. The Mexico-Canada stuff, again, has been resolved, and we're going to see the extent of how much it's resolved go when the 30-day sort of grace period ends for Mexico and Canada. But at least with China, that is not officially resolved yet. Here's a quick video on these Chinese tariffs to get a bit of an understanding of it, and then we'll keep going from there.
Tariffs right now on the United States, hitting billions of dollars worth of goods and energy resources. I want to get straight over to Eunice Yoon this morning. She is in Beijing with a report from what's happening on the ground there. What are they saying?
Well, Andrew, those Chinese counter tariffs are now in effect, but they probably aren't going to be meaningfully damaging to American businesses because they are limited. Unlike President Trump's tariffs, which have been blanketed all over the Chinese companies, these ones from China are targeted. Goldman Sachs estimates that the Chinese levies cover $14 billion of U.S. exports to China. So that's only about 10% of the overall amount of goods that the U.S. Shipped to China last year. But what we do need to watch is any signs that China is willing to retaliate in very different ways. Unlike President Trump's first term, the Chinese have already been signaling that they're willing to single out individual companies. Over a week ago, as part of these countermeasures, China announced that it's investigating Google on antitrust allegations, also blacklisting Illumina, as well as PVH. And then last December, it also launched an antitrust investigation into Nvda. And then, of course, late last week, there were some reports that the antitrust watchdog was considering investigating Apple as well on those.
So that's really the concern with China. It's not about the tariffs they're putting or the percentage of tariffs they're putting. It's, does this escalate to the point where they start leaning heavier into American companies that can't afford to be investigated right now via antitrust in China if they do any business in China, because their earnings growth has to be spectacular in order for them to maintain their multiples. So that's definitely something that we're going to have to look at throughout the rest of the week. I hope this ends up being a nothing burger and this doesn't escalate, but given Trump's attitude with tariffs, we're just going to have to wait and see if that ends up playing out. A couple other macro pieces of updates, and then we got to talk about earnings today. We had a bunch of companies that had some decent earnings, and then we'll talk about Nvda and Tesla as well. Nvda 130 in the pre-markets. Mstr, Michael Saylor is back. He has bought 7,633 Bitcoin for 742 million, 97.2 a coin. They now have 478,000 Bitcoin, 31.31 billion is, or 31.1 billion is what they used to acquire it. And their average is 65,000 a Bitcoin. This is probably what held Bitcoin up last week. Definitely had a nasty week for inflows in terms of the ETFs, was just not as strong. Bitcoin right here, 98,268. The meme coin mania has gotten even worse, folks. I mean, the latest meme coin that some of you guys might have heard of, if not, you'll be hearing about it for the first time right here, is Dave Portnoy with Jail Stool is what it's called. This coin is down 20% in the past day. It reached a high of 17 cents, reached a market cap of, I believe, like 200 million roundabout, or 180 million, something like that. Now it's at a market cap of 100 million. Now, the thing about Dave Portnoy and him doing this, which is, I don't know, to me, it's just kind of sad because I tend to like Dave Portnoy and I think he's like super cool and he tends to give back to small businesses and all this stuff. But him launching this is, to me, just pure greed. Now, he did say he's not going to sell till the coin reaches at least 500 million in market cap. The problem with that is that they're not going to let the coin get to 500 million in market cap because everyone knows it's going to sell off. It's like when an acquisition is announced for a company or there's a rumor for an acquisition price, you're not going to let the stock get above that price because you know, like, it's legally not going to be able to be sold above that. So it artificially, even algorithmically, stays below it. So Portnoy saying, I'm not selling a single coin till 500 million. Well, will the coin ever get to 500 million? right? So yes, he didn't launch it. Someone gifted it to him, but then he embraced it. I mean, he marketed it. He's amplifying it on his Twitter, all that stuff. So I don't know. I mean, again, more and more of these celebrities try to get into meme coins, even if Dave's trying to do it in a more ethical way by not like telling you he's not going to pump and dump. I don't know if he's ever going to make money off of it then, because you need someone to pump it and eventually someone's got to dump it. And if it's not going to be him, it'll be someone else. So I guess he's just pumping it up for other people to dump it, but don't know how that one's going to end up playing out. But that's what we got in some of the crypto ecosystem in regards to Bitcoin. No other major updates on Bitcoin. Man, we had the SEC task force on crypto launch last week. It hasn't really done much. No one knows if there's going to be any strategic Bitcoin reserve, but outside of that, Bitcoin's been relatively stale, and I think it's waiting for its next major catalyst. But as of now, that Bitcoin strategic reserve is probably going to be what continues to get more people excited. I am here in California today. For those that are just joining, going to be here for the rest of the week. We're going to be having a meetup on Thursday. So I'll be in this Airbnb pretty much every single morning doing the show. All right, earnings. Let's get into earnings growth. So we also have a ton of earnings to discuss. Let's pull these up right here and take a look at them. The earnings today actually were some pretty important companies. Some of these stocks are up, some of these stocks are down. But let's start off with this one that is having a monster day. And maybe it's because it's Monday. Monday.com, 108 on EPS versus 79 cents. That's a massive beat. And then 267 versus 261. That's a nice beat on revenue. Monday's project management software. For those that don't know what it is, it's a SaaS play. This bad boy's up 26% right now in the pre-markets. Market cap of about 12.8 billion. So you could classify it as like a mid cap. And they put up some good numbers. They put up some really good numbers. And they should be putting up numbers. I mean, quite frankly, if Palantir's putting up numbers, if Datadog, if these other SaaS names are putting up numbers, then SaaS as an ecosystem should be doing well. And Monday.com right here should be doing well because it's a SaaS name, even if it's a smaller one. So 26% up for Monday.com. Incredible day for them. The other one we have is McDonald's, Mickey D's. They had a double miss. So McDonald's right here, we have 283 versus 286, slight miss, and then 6.3 versus 6.48 billion. Again, slight miss. Their stock, Mickey D's, which is kind of seen as a defensive, especially in times of volatility because everyone's going to go to McDonald's. Their stock is actually up 2%. So market was okay with the double miss, even though McDonald's is indeed green. Wow, Nvidia's above 131. Holy crap, dude. Talk about Nvidia buying that dip. And SMCI as well. Look, so Nvidia 131, and then SMCI I think is up 4%. Yeah, SMCI is up 5.6%. Nvidia turned out to be the dip of the year so far. I know we got a long year left, but Nvidia turned out to be the dip of the year. This bad boy went to what? You had a chance to buy one of the best companies in the world at 113. At 113, dude. Everyone had that shot, and to be honest, I should have went even heavier at 113. It's easy to see that in hindsight, but there you go. Nvidia 131. As long as guidance is good, this thing should hopefully recover back to the 140s where it's at, and then try to make the next leg up if they can get to that 450 of EPS number that I'm projecting for 2025. Uber as well, up another 2.86%. If anyone missed the news, Bill Ackman bought a crap ton of Uber. 30 million shares. I think this is so smart by Bill Ackman. I mean, we've been talking about on the channel that Uber is undervalued. Like no one can deny. It's still trading at 22 times free cash flows. Uber is undervalued. The problem is the whole narrative with FSD. And quite frankly, if you bought Uber, you just have to be willing to deal with that narrative. And if you're able to deal with it, which if you don't like Tesla that much, or you just don't believe in the Tesla robotaxi thesis, it's kind of easy to deal with it and just buy an undervalued name. There you go. 30.3 million shares for Bill Ackman, 2.27 billion his stake in Uber. I think he started buying it around 63, 64. So he definitely is up on the position. Is doing well. He technically owns Grab now because Uber owns 14% of Grab. So if Grab follows the same inflection point that Uber followed over the past couple of years in terms of getting to adjusted EBITDA, a positive adjusted EBITDA and adjusted and positive free cash flow, then I think Grab has a similar trajectory coming up as well. So Bill Ackman now officially in Uber. Tesla, I mean, we'll talk about it more in a second, but Tesla has been struggling right now. Tesla down another 1% in the pre-markets at 358. I didn't even know it closed below 360 on Friday. I didn't even see that, but it did. Closed at around 358, 359. Now it's right here at 358.01, down 1%. So we'll talk more about Tesla in a second, but that one definitely got hit. Amit, do you think Grab is a better opportunity than Uber? Uber is much safer than Grab. I like Grab for a double. I think Uber going from 70 to 140 is a bit tough. Grab going from 4 to 8 is in my opinion, a bit easier over the course of the next 2 years. Now, granted, could Uber double in 2 years? Yeah, that could definitely happen. I just personally think there's a little bit more asymmetry with Grab, but Uber is way safer. So it's just a question of how risky do you want to get on these plays. On Semiconductor also had earnings. They missed on EPS 95 cents versus 97 cents, missed on revenue 1.72 versus 1.76 billion. This stock in the pre-market is down about 4.27%. So outside of that, no crazy earnings. You had McDonald's, you had Monday.com, you had onsemi, and then I think later today, tomorrow's going to be a really big day for earnings. Today, nothing too crazy. Throughout the rest of the week, we have Shopify, we have BP, we have Robinhood, Reddit, DoorDash, Lyft, Upstart, Coinbase, Palo Alto Networks, Airbnb, DraftKings, Roku, Datadog, Sony, Moderna, CVS. I mean, we got a Twilio. We got a lot of companies coming up later this week. So there will be plenty to discuss with the rest of these earnings as well. Oh, and SMCI. SMCI is tomorrow. So I still am holding on to my SMCI calls. Yeah, the sucker's up 6% right here. I mean, hopefully this thing can get back to like 45, 50 if the accounting stuff is the only reason why it's getting held down, because it is cheap from a valuation perspective. Even though their margins suck, but still, I think it's cheap enough to overlook that as long as they're not an accounting fraud. Nanoway, thank you for the $5 super chat. Are you missing any market opens or closes this week? I'm definitely missing the close on Tuesday and definitely missing the close on Thursday. But outside of that, I think we're going to be good to go for the rest of the week. I don't think I'm missing market open any day this week. And next Monday, I'm have to miss the market open, market close, but it's President's Day, so it doesn't matter. So yeah, we should be good for the majority of the week. Maybe we missed 2 or 3 shows, but the rest of that should be good. Nebis, I have not looked at yet, guys. I've just been so busy, but I have seen billboards for Nebis Group. Like literally, as I was driving back from SFO, I'm seeing billboards for Nebis Group, and I think the headline was like, "Your GPUs are constrained. You need Nebis," or something like that. I also saw a ad for ServiceNow, and you only see this in San Francisco, dude. You don't see this in New Jersey. In New Jersey, you see like, hey, did you get injured in some class action lawsuit? Call drjerry.com to like get a refund. Or that's the billboards you see in New Jersey. In San Francisco, put AI agents to work for people. Basically, they're trying to say we're going to replace people with AI agents, but they're trying to be nice about it. So ServiceNow, this is the billboard that I saw going into coming back from SFO, going into the city. So yeah, California, talk about a tech city. But I forgot, dude, this is where tech was born. This is Silicon Valley. Like there's like hundreds of thousands of tech workers here. So I'm bound to run into more and more tech into this area. Big Bear AI, this thing is pumping even further, up 8%. Again, I have not done any fundamental due diligence on this. I think this is more of a gamma squeeze. Everyone that I've talked to, or just like people that I've seen on Twitter talking about it, it's more about a squeeze than like this is the next big AI stock. Now, the fact that it has AI in its name could be a reason why it's getting a little bit of excitement, but I think it's a squeeze. This thing was 30% short. It looks like the shorts are covering, and it just continues to squeeze higher. So if you're in this one, congrats. I don't know about chasing it. You got to kind of do that at your own risk, but it's definitely getting a little bit of a bid right here. Amit, would you ever consider moving to California? Absolutely not. I mean, I've thought about it, but like, dude, it's 6:09 in California and it's 9:09 on the East Coast. And I'm just like, this is not when the market opens. This is weird, bro. Like the market opens at 9:30 and I do the market open starting 8:45. This is 6:30 and 5:45. It is so weird. Like the market close is going to be at 12:45 p.m. Like, what is that, bro? Like, I just feel like I'm too conditioned on East Coast timing and, you know, the way finance works in New York to move to California. Also, it's just like, dude, the taxes in California are ridiculous. Like, I don't think I would want to be here for that. I think you got to be ready to pay a lot more taxes. Now, New Jersey taxes aren't that amazing either, but it's definitely better than California. Nonetheless, let's move on to a couple other things that we got to talk about. So first of all, Tesla and Nvda, I think we'll start with them. We do have an update on Nvda. So Nvda right here at 130.76. I think Nvda can break. And one of the reasons Nvda can break is because obviously the market's very excited about the concept of more GPU demand being in place purely through the idea that DeepSeek has proved to us that inference costs are going down. And if inference costs are going down, some of these commercials on OpenAI and some of these other AI companies actually in the Super Bowl which people didn't love the Super Bowl commercials that much this year, but there were some that were decent. We're hinting to the fact that inference training is going down. And if inference training is going down, that means there is broader demand because any company theoretically can then start training their own models in a more sophisticated way. Well, here's an update we got from OpenAI this morning. OpenAI is reportedly preparing to design its own AI chip aiming for fabrication at TSMC in H1 2025. The move is seen as a strategic step to gain negotiating leverage with different chip suppliers. So Reuters reported OpenAI is advancing plans to develop its own chip, aiming to reduce dependence on NVIDIA and manage rising costs as demand for generative AI models grow. The initial chip design is nearing completion and will be sent for fabrication at TSMC in the coming months, with the tape-out process expected to take about 6 months. OpenAI plans to begin testing the chip by late 2025 and aims for mass production by 2026. The project is expected to cost hundreds of millions of dollars, including the development of supporting infrastructure and software. Now I think we know why OpenAI is raising $40 billion at a $260 billion valuation. They're going to build their own chips. They're going to build their own chips. I mean, that's what it seems like. Now, is this bearish for NVIDIA? You could argue this is definitely competitive with NVIDIA, and OpenAI is not the first tech company to do this. Microsoft's doing this. Meta's doing this. Google's definitely doing this with their own TPUs. Amazon said on their earnings call they're going to be doing this as well. However, NVIDIA still holds the majority of the market. And the fact that this is going to potentially work or just get tested by 2025 and then maybe work by 2026 does mean that there is a level of risk OpenAI is taking to make sure this thing actually works and it works effectively enough to replace the reliance on NVIDIA. I don't think that reliance is replacing anytime soon. And if it does get replaced with OpenAI, you're going to have a lot of other people that don't have the money, infrastructure, and resources like OpenAI to build their own chip that would just move to the front of the line, given OpenAI or NVIDIA is still supply constrained, as per what Jensen said in the Q3 call. And those people would be up next to get those chips as well. Now, it might level the playing field because now you have multiple people making chips of the same quality, but I don't think it's bearish NVIDIA by any means. My actual bear case for NVIDIA is if their gross margins go down. Because right now they're holding, 75% margins? I think it was maybe 73 last quarter. If that thing goes down to 65, I mean, that's not going to be the best, right? And their net income margins are also going to get hit, which is also not going to be good either. So I think that's the bear case I'm looking out for. But as long as that doesn't change, I think we're going to be in a good situation. Miguel says, as per Jensen, even if other chips are free, they are still more expensive than NVIDIA's. Yeah, that is also correct. I mean, NVIDIA has the ability to mass produce these chips to get them to be as cheap as possible, even with the pricing elasticity they have to put a heavy premium to put that 70% margin on those chips. But it's only because they're able to produce them at such scale. And if OpenAI is not able to do that, then that's not going to work. Also, OpenAI is making chips for themselves. They're not making chips to serve other people. So if they make chips for themselves and that saves them some cost because they're going to lose $14 billion this year, then sure, that's great. But that doesn't necessarily mean they're literally competing to sell these chips to Amazon with NVIDIA. So I think long-term, I think the market's just waking up to the fact that NVIDIA is fine. Nothing's going on. It was very fragile on this DeepSeek volatility, but it kind of, in hindsight, it looks back at like, yeah, it should be fragile, right? It's the most important company in the world. If there's this groundbreaking new technological development, everyone starts freaking out. You probably get a sell-off, and that just created a fantastic opportunity for people to get in. And as long as their earnings crush, it will be seen as one of the dips that rivals August 5th in terms of its opportunity that it gave to people, particularly because August 5th lasted for like a couple hours. This thing lasted for a good 5 days. I mean, it was below 120 for a good 5 days. And it was just one of those things that people could take advantage of. Tesla, let's talk about Tesla. So Tesla's down 1%. What is everyone's best theory for why Tesla's down? I'm curious. What is everyone's best theory for why Tesla is down? Because my only theory is that their earnings are catching up to them. And I think people are ignoring FSD again. People are ignoring robotics again. No one wants to factor that into their valuation, which, look, it's fair because it's not real yet in terms of like actually producing substantial revenues. By the way, I did upgrade to FSD on Saturday. So now I'm never driving again. So FSD, you got $99 a month from me. And I love it. It's been great. But the street doesn't care. Stock's at 350. Street doesn't care. Now people are wondering, is Tesla just an auto company? You start getting all those jitters that come creeping back up. Tesla had basically 4 years of dead money. You get a lot of people that get worried. Is it going to be dead money again until Elon actually fulfills his promises? And so I think there is a lot of fear right now about Tesla. and people might be rotating a little bit into Nvidia. Giving back the Trump pump might be giving back a little bit more of that Trump pump. If it drops below 300, I think it gets a bit more exciting as well. The question is, does it actually have the room to get below 300? I mean, that would be a nice little decline. And that would probably be a slow decline. That's not going to be Nvidia 140 to 115 in like 5 hours. I think that would take some time and it would be painful as it continues to go down. People say Elon is not focused. I've heard this argument as well. Elon is scaring people away from Tesla, the political stuff. Again, none of that stuff to me is actually a bear case. It could be a short-term volatility reason for why Tesla goes down. I don't think it's a bear case for Tesla at all. I think Elon's been able to execute regardless of how much time he's putting into Tesla simply because he's Elon. But yes, it could absolutely create a argument for Tesla folks to get a little bit more scared. You know, all of the investor base on Tesla, though, has, or at least all of Wall Street, like, I think there's like, I don't know the exact number of analysts. I think it's close to like 50. And it's almost 70% of the analysts have upgraded their stock on Tesla into the 400s, or their rating on their price target on Tesla into the 400s. And so either those ratings were fake and they don't believe that. And if we see them downgrade soon, we're going to see, you know, those analysts reacting to price. But if they were legit, then hopefully Tesla has some room to not really crack below 300 and continue to go higher based on the assumption of what a lot of the analysts said, which is that, hey, we think FSD is an emerging technology and it's going to work. Right now, Street seems to be forgetting about that, at least over the past couple of weeks. Yeah, Uber pumping as well. That definitely helped Tesla, or that definitely didn't help Tesla because they're so algorithmically pegged to each other. It's weird. But Uber going up basically 20% has not been the best for Tesla. Uber right here, 76.81, up 2% or 2.96% in the pre-markets. David, thank you for the $7 super chat. Do you have any thoughts on Oklo? My thoughts on Oklo are the same that I've had since this thing was $6. Now it's at 55, down about 1% of the pre-markets. If you believe in nuclear energy as the next vertical for massive infrastructure when it comes to AI and just the overarching AI demand for energy that'll be there, then yeah, Oklo is a good buy. But you have to buy it off the assumption that it'll play out because there are no earnings, no revenue. It's an $8 billion company. They haven't made a penny of revenue. There's nothing real here other than an idea. But an idea can go very far. So if you buy it, you got to be ready for the volatility of that idea getting nuked one day, right? That idea not working out. But I think a lot of people that are in Oklo don't really care. And so that's why people are piling into this one. Yes, it's a narrative stock, exactly. Isn't it? But look, if you got in at 6, I mean, do you sell at 55? Does it go back to 6? I don't know. I don't think it goes back to 6. It could maybe goes back to like 30, 35 when things get really volatile, but maybe even 20. But still, if you bought at 6, you either capture your win or you kind of just hold on because you believe Sam Altman, who is the chair of Oklo, is going to get them some sweet deals with OpenAI. But again, that's just a narrative. That's not real. That's one of those things you just got to end up hoping on. Let's talk about Pltr. So we talked about Nvidia. We talked about Tesla. Let's talk about Pltr. Pltr is holding 112. Does anyone still think this is real? Does anyone think this is real at 112? I made a tweet last night basically saying I still like I was at the airport and I was just looking at Pltr and I was like, dude, this thing is triple digits. Like this is legit a thing. Like this is happening. And it's like it's just I talked to a lot of people over the weekend in the Pltr community, tried to get their thoughts. Some people that have been following the name for a long time, even though they don't come on YouTube and they don't have like a content creation aspect to their life. But I was talking to them and I was like, what do you think? They're like, bro, like I don't fucking get it. Like I don't get it. It's happening. I don't know what to say. A lot of people have covered calls that they're stuck in at $80, $85, $100. I mean, so many people just did not expect the type of pump we got after earnings. No one expected 36% revenue growth, but it's happening. And it's kind of crazy. It's kind of crazy. Easy Day says, bro, admit, I recently watched your first Pltr video. It's very real. You called it 3 years ago. This is the one stock where qualitative just makes more sense than classical quant and valuations. You know, I watched that video as well over the past couple of days. And one thing I remember saying in that video, even though I barely knew how to analyze, forget the stock market and just valuations, I could barely even analyze Pltr. But I think that kind of makes the video unique because it was this guy who's like, hey, I just put $25,000 into Pltr. And the concept of the video was, I was really upset that when I was in college, so from 2016 to 2020, I didn't invest in transformational tech companies. And I was annoyed because I was looking at like Shopify and all these amazing Adobe, all these products that I used that I didn't invest in. And I was like, okay, I can't use Pltr. But my simple one-line thesis was, I think their software will be in every single vertical, in every single industry in the world. That was the thesis of that video. And then obviously the analysis, continued to get better over time as we dug up the thesis. But that was the analysis. And I was telling myself, I think this is going to be one of those tech stocks that I'm going to regret not investing in, just like I regretted not investing in Shopify or Adobe or Apple or Google back when I was in college. Because I had money in college. Like, I didn't have a lot of money, but I had, $100 a month or $100 a week. I was making like $1,000 a month sometimes with my coaching business. So I had a little bit of money I could be putting into those names, but I didn't do it. And so in 2021, when Pltr was 25, I was like, I'm not going to make that mistake. Now, granted, because I didn't understand anything about valuations, $25 to pay for Pltr now looks like a good deal. But in 2021, that was a horrific. That was like $50-60 billion market cap. It made no sense, right? So the point of that video was just, I think their software will be used everywhere. That was my gut feeling, along with the fact that I liked CARP and the philosophy angle to the ontology, all that stuff. And that thesis kind of is playing out. I mean, their software is literally being used everywhere, and the growth that they're showing and they're capitalizing on is really putting on a case study of how software can be transformative without having a sales team and still be valuable. And the market, for whatever reason, is giving it a $250 billion market cap. And it is what it is. It is what it is. It's just incredible, but it's happening. It is absolutely happening here right now. So Pltr right here, 112. I mean, what do you guys think? Do we pump or dump today? Let me just know in the chat if you guys think we keep it going. We're green in the pre-markets. I don't see a reason for us to come back down. Some people said the 116 top that we hit on Friday was a local top and that we're going to start coming way back down. I thought, it hit 116 and it just got really aggressive and people started selling. I don't know if that necessarily means it's a local top, but I wouldn't be surprised if we go back to 100. Do I think we have to go back to 100? I don't know. I mean, the momentum is strong. Narrative is strong. Growth is not slowing down. It's really up to the market at this point of how much they want to keep paying and if the buyers get exhausted. But I don't think this thing has to fall. I do not think this thing has to fall back into the 90s or 80s. And if it does, I mean, like that's the crazy part, dude. Now, people who have just discovered Pltr are going to see a retracement from 112 to 90 and be like, oh, crap, that's a great dip. I got to get in. And if that happens, I mean, we are in a new era for Pltr. We would need a dramatic decline to get back to $60. A dramatic decline. We would need to see some type of narrative or maybe big investors sold their stock. We would need to see something aggressive to even get back to 60. And that's just not happening unless, again, we get something aggressive. If not, then we might be able to oscillate in this range or potentially even go higher, which valuation wise doesn't make sense. I can't justify $250 billion, but it's not up to me. It's up to, I think, big money that's getting into the name. Retail has been a net seller of Pltr. We talked about it on Pltr Weekly on Friday. If you look at the Robinhood data, retail is a net seller. I mean, it does seem like these are more institutional investors that are hopping in. Plus, this headline definitely doesn't hurt. Fortune magazine this weekend, Pltr may be the stock picks for the Doge era as it leads the AI revolution while Musk plows through government agencies. What Doge is doing is a very real thing, folks. It's a very real thing. And this article basically talks about how multiple people near Pltr are associated with Doge. And as a result, if Elon's getting ready to really clean up the government, then there's a shot that Pltr is a software that helps clean it up. Now, here's a website everyone can go to if you're interested in what Doge is doing, doge-tracker.com. So far, they've saved $36.7 billion, $245 per American taxpayer, and they have 509 days until the Department of Government Efficiency is terminated. How are they getting this data? If you look at their feed, they just simply cross-reference all of the Twitter posts that Doge puts out with the cancellations of contracts. And as you can see, when you scroll through it, the way they saved $36 billion so far is just by canceling a bunch of contracts. So Department of Labor, DEI contract, that was worth $10 million. They canceled it. Department of Education DEI contract, which means basically the Department of Education pays a consulting firm that works with DEI, yada, yada. That was canceled for $5 million. Department of State DEI contract, that was canceled for $5 million. Associated Press subscription cancellations, $20 million. We were paying $20 million to the Associated Press for some reason. That was canceled. So if you go through this website, there's just a ton of different things that have been canceled. And if this accelerates, this is why the bond market is actually starting to show a little bit of strength here in terms of bond yields coming down, the 10-year down again today. People really think that even though we are in a ridiculous deficit of $36 trillion, that there is some way that we can save some money. And if we can save some money via Doge, which in my opinion, again, this is my personal opinion, I think this is the best administration that has a chance to audit the government. If we don't audit the government now with Trump and Elon kind of pushing for it, like when are we going to do it? So if we're going to give our children any chance to not be burdened with the amount of debt that we're burdened with right now. I mean, if this 36 trillion turns into 72 trillion, like, could you imagine giving that to the next generation of Americans? Like, it's just unethical. We got to do something about it. And it's going to be tough. It's not going to be easy to resolve it. And I'm not going to agree with everything Doge does. I'm sure no American is, but in some respects, something has to get done. This is what Trump did yesterday. He tweeted this right after the Super Bowl. For far too long, the United States has minted pennies, which literally cost us more than 2 cents. This is so wasteful. I've instructed my Secretary of the U.S. Treasury to stop producing new pennies. Let's rip the waste of our great nation's budget, even if it's a penny at a time. I mean, you got to ask yourself, who could possibly disagree with not producing pennies anymore? Who even uses a penny? Like, no one, for those that are international, like, I mean, I don't even know if you've ever traveled to the United States, you've seen a penny. No one uses pennies anymore. So the fact that we are paying 2 cents to make 1 cent is insanity. We don't need it. This is the type of waste that you only get through a sophisticated audit of, like, what do we not need? Just like a company, just like a business, they look at their balance sheet, they look at their operating expenses. They're like, we don't need this. We don't need this. We don't need this. Oh, wow, we're GAAP profitable. Huh? Turns out when you don't spend on stuff, you end up making some money. So yeah, the world did this long ago. New Zealand did this a while ago as well. Like, this is dumb. Like, the fact that we're still paying for this stuff is ridiculous. So I do think that the bond market for investors, what does this mean? This means that the bond market's getting excited that if we actually do cut costs, the inflation fears, even with tariffs, start to diminish simply because of the idea that the other side of our balance sheet is not going to have as many expenses as it did for the past 20 years, if Trump and Elon are very, very serious about reducing costs. And so we're going to find out over the next coming months. But as of now, that's the progress that they've made so far. Grab is up 0.18% of the pre-markets. Coinbase is up 2.23%. Peloton's up 1%. Archer's up 2%. Pinterest's up a little bit. Pinterest had a great earnings. They're up 20% since then. SoFi up 1.14%. I'll tell you, SoFi sentiment seems to be pretty in the gutter. I mean, you got a lot of people that are just upset that this stock is stagnating. I still think, it's not that big of a deal. It's up 90% in the past 6 months. So it is what it is. But you do have some people that are getting a little bit more annoyed that they're not seeing as much progress on the tech platform, and they're waiting for a little bit more from Noto. Google right here is up 1%. Meta again on a tear, 719. Tesla now down 1.5. Tesla 355. That's getting a little ugly. Uber going vertical, 3.35%. Big Bear AI is up 8.5. Nvda is at 130. SMCI is at 38.20. That's up 5.29. And then you got Hoodie. That's at 57.33. Again, I don't know why Hood is up, but it's up. I guess it's a little bit of a pre-earnings bump. In terms of earnings, we did a Hood Weekly on Saturday. The problem is these guys raised the earnings estimates again, like on Saturday. It was at 930 million. Now it's at 940 million or something like that. What is the estimates are? Yeah, 950. So the analysts, if these are correct on Seeking Alpha, are now expecting $951 million, and they're expecting 44 cents of EPS. As bullish as I am on Hood, I don't know if they can pull off a 40% net income margin to bring in that much profit. And so there's a little bit of a fear I have that Hood is going to have a phenomenal quarter, but the expectations are so sky high that could tank the stock. But I don't know. We're going to have to see. I'm not making many moves on Hood. I'm not selling anything. I'm holding. I'm kind of relaxed going into earnings. Whatever happens, happens. But I do think that the expectations are a bit high. Nonetheless, if Hood can live up to it and smash even these expectations, this is going to be one hell of a quarter. So on Wednesday, we're going to see how Robinhood ends up pulling this off. All right, folks, here we go. We got 20 seconds. We have 20 seconds. So I did not bring the actual bell, quite frankly, because I forgot it. I could have packed it, but I didn't bring the actual bell. However, if you are coming to the meetups, you are going to get a gift from me, which is a small bell. So I realized this morning, you know what? I don't have the big bell, but at least we can ring the small bell. So we're still going to have a bell on the market open. Here we go. 9:30 a.m. Monday, February 10th, all the way from the Bay Area, California. The stock market is now open. That is so embarrassing, but that's going to be the bell for the next 7 days. All right, here we go. 111.52 on Pltr. We are still holding $111. Robinhood taking a little bit of a dip from 57.77 right now at 56.34. We did close about 56.29 on Friday, so we did get that $56 close. Right now we're here at 56.40. Pltr 111, Intel 19, Apple 229. T-Mobile's up 4% because they had a great ad in the Super Bowl with Elon's Starlink. They're now giving anyone access to Starlink, even if you're not on T-Mobile, which is actually very interesting. It's actually compelling me to think of T-Mobile a lot more. So T-Mobile right here, 256, that's up 4%. I think they won the Super Bowl in terms of the best ad, which had the most impact. SoFi, 1509, that's up 1.4%. Google, 188. I did buy 20 shares of Google at 183 on Friday. So we got 20 more shares for Google, 188 on Google. That's up 0.64%. Meta's at 718. Costco's at 1,050. Nike, 6944. Nike had an ad about women's empowerment for the Super Bowl. So they haven't had a Super Bowl ad in the past couple of years. So they went with sort of the women empowerment brand identity play over the Super Bowl, and we'll see what impacts that has on its stock throughout the coming month. QQQ, 527. The Qs are up. Reddit was at 235 last night. Right now it's at 226. Airbnb, 135.78. PayPal, 78. You got Caterpillar's at 365. Shopify got upgraded today by Citibank to 175. They're up 4% on that upgrade. S&P is green at 604. NEO is also green. Tempest AI, Nancy stock, that's up 2.14%. Amazon, 229. After their earnings, they did about $750 billion in revenue for 2024, which was just incredible. Rocket Lab's up 1.64%. Fortinet's up 0.2%. CrowdStrike, new all-time high at 426. Palo Alto, 196. Oracle at 175. Vistra, that's up 1.95%. Data center play. And VRT, that's up 1.6%. Another data center play. Tesla, wow, 2% down on Tessie. 2% down on Tessie. Tessie is getting hit. Nvidia, baby, 131.57. So the money is rotating out of Tesla, at least today, definitely into some Nvidia. Robinhood trying to go back for 57. Where's Palantir? Palantir, 109. All right, Palantir goes red. We'll see if that has a little bit of a flip, but Palantir is down about 1%, 109.85. Big Bear AI is up 12.5%. Tesla, 357. Uber, 77. Oklo is red as well. SMCI up 5%. And then Nvidia right here, 131.6. Not bad. Nvidia getting some love. Amit was walking through the airport jingling like a reindeer. That's hilarious, bro. That's actually hilarious, bro. That's probably exactly what was happening. Disney's 111, T-Mobile's 253. Let's look at some of the crypto names, or let's do semis first. Semis are all green except ON. They missed on earnings, and then ARM is down 1%. Dell's up, Lamb's up, ASML's up, Broadcom's up, Qualcomm, TSM, AMD, NVIDIA. AMD up 1%. It took a nasty beating last week, down about 15%. A little bit of green today, 101, and then NVIDIA right here, 131.60. Let me check resistance for 132 on NVIDIA. I think NVIDIA is back on its way to get to the 140s and move on from a lot of this. Now, granted, I think earnings will really put it over the hump, but if we can get to 140 before earnings, that would be pretty incredible. 132 on NVIDIA is 246,000 shares. 246,000 shares. And again, the reason I'm saying that as well is not just the price action. If you've read any of the reports over the past week, it's like everyone's saying, hey, DeepSeek means more chips. DeepSeek means inference costs go down, which means more companies can afford to invest in the infrastructure to actually train the models. If the inference training is so low, they can get the actual hardware needed, aka the GPUs from NVIDIA. So I think that alone is going to be the narrative, and hopefully that carries into their guidance going into the rest of this year. Cloudflare, let's take a look at this one. Cloudflare they had a great week yesterday. They're up another 0.36%. BlackBerry is up another 2%. So for those that are in BlackBerry, that one is doing very well. McDonald's right here up 4%. Monday.com, again, they crushed earnings. $12 billion company, now $16 billion, up 22%. Another SaaS name that has done very, very well over the past 2 months with these earnings results. Palantir right here, 109.60. So Palantir is getting hit down 1%. We'll see if that red candle retraces, but that one is red. ELF, nice little recovery from 63 to 72, still down about 15% after earnings. Bitcoin 97. Ethereum took a nasty hit yesterday as well. Ethereum's at 2,600. It did drop to 2,400 at one point, but a little bit of a recovery there. SMCI is tomorrow. I'm not streaming it, but Chris and Matt are streaming it, if I'm not wrong. So they'll be live and they'll be seeing what happens with SMCI. Tesla right here, 354, going below 355. NVIDIA, wow, 1 cent away from 132. There you go. Folks, we got to ring the bell for 132 on NVIDIA. Oh my goodness. There we go, baby. Wow, that's up 2%. Look at that. 132 on Nvidia. How many shares for SoFi at 16? Well, where's SoFi? SoFi's still a little far away from 16. Let me check. For SoFi 16, we are looking at 32,000 shares. So not a ton. Not a ton of shares to get to 16 for that. Wow, Tesla. Dude. Does Tesla want to go below 350? Holy crap, dude. Goodness gracious. SMCI is going to be after the close. SMCI is going to be after the close. Dude, this bell. I'm so mad I forgot my real bell, bro. Because I can ring this bell. Like, I'm not in a hotel or anything. No one's going to get mad if I ring the bell really loud. I just, like, legit forgot it. I was doing so much shopping and packing on Friday and Saturday, or Saturday and Sunday. I just had to get so much shit done. And the bell ended up getting left out. I just forgot the bell. Pltr, wow. Pltr went green. Now it's flat, but it just went green. Holy crap. So 108.72 was at the intraday dip so far. Back to 110. Talk about strength. Robin at $57, holding on to 57. Grab is going red. Is the dollar up today? That could be a reason. Grab's earnings is on the 19th, so we'll be looking at Grab next Wednesday. Yeah, the dollar's up a little bit. That's probably hurting it. So February 19th, 7 p.m. Actually, I'll be live because they're in Singapore, so their earnings will be later in the day for those in the States. Shopify 122, that's up 4%. S&P is green. Oxy is up 1.5. Buffett owns a ton of that name. Nubank 1381, that's up 0.5%. AMD 109, Lyft 1489, Google 186, Amazon 231. Back to the 230s for Amazon, and then SMCI right here 3824. Nvidia, wow, 133. I didn't even see that. Holy crap. All right, folks, we got to ring the bell for 133. At least it's better than ringing the big bell and annoying everyone because they're hearing the bell too much. At least that's a little bit more manageable. If Nvidia is going to go back to 140, we're going to be ringing the bell like, I don't know, 2 times a day just for Nvidia. So at least it's a bit more manageable. MicroStrategy, which did buy 7,000 Bitcoin, they're at 335 for MSTR. That's a bell's. Where's my coffee? Oh my gosh. Someone said that bell sounds like when you're doing a puja. Yeah, that does. If you've been in an Indian household before, been to an Indian temple, it literally sounds like a bell you do during a puja, which is like a prayer. Oh my gosh. Airport bell. That bell is hilarious. I'm not gonna lie. SpongeBob mini violin vibes. Pinky outrun ringing this bell. Yo, you guys, honestly, I tend to think I'm funny. Maybe, maybe my humor is rubbing off on you guys. You guys are just hilarious. I guess you know where you get it from, right? Good host that has humor, good chat that has humor. So very nice. I'm happy to see you guys have stepped up your humor game over the past years, I was waiting for you to catch up. I mean, it took a long time, but you're here. I think you guys are finally here. So incredible stuff, guys. Incredible stuff. 133.5 on Nvidia. We're trying to let's see 134 resistance. Let's see 130. That's the bell housekeeping rings before entering. Oh my goodness. All right, never mind. This is not my humor. You guys have humor of your own. Because I'm not this funny, to be honest. These are bangers, one after one, these jokes. Bangers. 134 is 105,000 shares. 105,000 shares. That's nothing. We can get there. Marcel says our humor is rubbing off on you. Yeah, probably. Your humor is probably rubbing off on me here. I'm in California. For those that are wondering, we're in a little bit of a different setup. Going to be here for the rest of the week. All right, we are 10 cents away from 134, folks. Holy crap, dude. 4 cents away. There's 120,000 shares that could get bought up in like 2 minutes or 2 seconds. Are we going to hear the bell again? Or are we? Oh, it's getting rejected at 133.9. All right. Getting rejected right there. This is why I didn't sell covered calls on Nvidia. That's why I didn't do it. I was like, nope, this thing's going to recover. I have a feeling this will recover. And selling the 135 covered call was so juicy last week, but like still, it's not worth it. Like when Nvidia gets into the 140s, then I think the covered calls make more sense. Until then, hopefully this thing can just recover. SoFi right here, 1512, SMCI 3838. Let's see how much we're up on the SoFi options. I think we're finally legit green on these. Oh yeah, we're actually up. We're up $2,000 on these. Now, here's the question. Do we sell these? Do we sell these? Do we pocket the $2,000 or do we take the risk on SMCI earnings, bro? That is the question. Do we pocket this or do we freaking wait till SMCI shows us they're not even a real company and then it all goes away? Because I feel like that's probably what's going to happen, dude. It's like, hopefully that doesn't happen, but everyone's expecting them to pump. I hope they pump, dude. I hope they do. I hope we don't get an earnings delay of like 50 minutes and everyone realizes they're actually a fraud. Damn, it's kind of 50-50. Some of you guys are saying sell it. Some of you guys are saying hold it. Half and half. You know, half and half tends to be the best idea, to be honest. Half and half usually tends to be not the worst idea. I'm up 40% already, and I'm thinking the same. See, like everyone's a little like, all right, wait a second. Are these guys actually real? There's a nice little gain. We're up 30% in like 2 weeks. That's not horrible. It's not horrible. You have to hold for content. That's true. It would be kind of boring if I don't hold on to them. But that's where the half and half solves. The half and half solves. It tends to be honest, to be fair to that point, like this play was literally just for the content. Like this was not like a realistic play in the portfolio. This was just like, all right, we'll do it for fun. So it does make sense holding through. $2,000 is good money, dude. $2,000 is not bad. $2,000 pays for a little bit of this freaking trip that I'm self-funding. Dude, there's a lot of expenses when you guys travel. There's food, there's Uber, these freaking dude. As soon as I got to California, I realized how expensive it was. Like you try to get a burger, $20. I'm like, what? Like this is insane. Like how? Like it's so expensive, or at least SFO. It's ridiculous. Fucking $60 Uber for like a 20-minute drive. It's like, come on, bro. That's another reason I don't want to live here. This place is expensive, bro. It's just so freaking expensive. Pltr right here going green, 111.39. Hood 56.72. Apple 229, and then Tesla still red, 353. A little recovery from 352, but still green. Still green. And people say Uber is dead. Yeah, Uber was definitely not dead last night, bro. The amount of Ubers that were at SFO. Granted, these are business expenses, which are good. I can write them off, but still, bro, it's doing a trip like this. It's like a couple grand minimum. Just like it's expensive. California is not a cheap, or at least SFO is not cheap. You know, maybe LA is a little better in certain parts, but I mean, it makes sense why people have such high salaries in the Bay Area, right? It's like even teachers. I feel like teachers are making $100K or something, if I'm not wrong. Like the average teacher salary in the Bay Area might be a little off on that, but it's like it's way above. Like New Jersey's average teacher makes $45,000, maybe $55,000. It's probably gone up over the past couple of years, but I know this because my mom was a teacher, right? Like, so like those salaries are not impressive salaries in terms of the work that they do and also the cost of living in New Jersey. But still, in California, I feel like you just can't. It's hard to survive on that in the Bay Area. Rocket Lab 28.48. That's up 4%. CrowdStrike 430. That's wow. CrowdStrike. I mean, what a recovery on this thing since August. 431, 430.47. SMCI 38.25. SoFi 15.16. Tesla 354. And Nvda trying to go back for 134. Trying to go back for 134. My yeah, teachers in Cali make more than other states, I would imagine. Dude, it's just an expensive place here. I know people making 150 to 200 grand with roommates. Low income is 165K a year. So yeah, dude, if you made 165K in Texas, I don't care where you are in Texas, 165, you're living like a king, dude. You're living a lavish life. 165 in New Jersey is not horrible either. 165 in New York, it depends on where you live in New York, but I don't think that's crazy. But 165 in the Bay Area, it's like, dude, and most of that's already going to taxes. It's just tough in this part of America. But nonetheless, you know, the Bay Area is the Bay Area for a reason. Also, I mean, this is one of the things that we saw yesterday. The stat came out that OpenAI employees are, if you were in the top, the first 100 employees of OpenAI, you're worth close to 20 million already. Close to 20 million already. So, I mean, this is another reason people move out here and to take a risk on a startup, because if you do end up hitting the lottery and get into that right startup at the right time, you end up making, you know, just boatloads of money with the exponential growth and liquidity of the startup market. AMD right here, 109.72. That's up 2%. So AMD is getting a little bit of a bid. MSTR is up 2.5. SoFi is up 1.6. SMCI still holding on to 5%. Hoodie just below 57. Coinbase up 1.3. Goog's at 188. I'm not seeing any dramatic moves anywhere. Airbnb is flat. Hershey's is flat. Pinterest is down a little bit. They were up 20% Friday. That makes sense. DraftKings is flat. ASTS is up 10%. That's nice. So they're getting a little bit of a bid. The crypto names are pretty much all green, including the Bitcoin miners. Well, Bitcoin miners actually slightly flat, but Riot is green. CleanSpark is down 1%. Bitcoin 97. Nothing too crazy. Nothing too wild. Did Chris say call him? Is he in the chat? Did he say call Chris? Okay, we'll call him. Sachin says this is why Bear Area is cuckoo. Everyone is getting paid high, whether they deserve it or not. That is also true. That is also true. All right, let's call Chris. I don't know if he said to call him, but you guys are saying to call him, so he probably said to call him. So let's call him here. Let's get his preview on SMCI as well and see what he thinks. 134. Wow. Nvda. Okay, folks. You know what time it is. It's time to ring our little bell.
Small, but it's mighty.
Chris, you like the bell, right?
Yeah, I like the new bell. All right. So I specifically came on today to basically hold hands with everyone who's in SMCI. I don't think that there is going to be a problem tomorrow. On the contrary, the amount of demand that's out there, and literally, like, we got the playbook from Google, from Amazon, from Microsoft, from Meta, that they are expanding spending on CapEx, which means that money is going to eventually bleed into these guys. Now, if this was a fraudulent business, no one would be doing business with them, okay? And the products would not be real. That's completely the opposite. Like you saw with Elon and what do you call it? The XAI team, they posted like their super cluster. All that stuff was SMCI. Even Google's TPUs, like the infrastructure is partially super micro, okay? So there is no demand issue with super micro and its products. Have they been doing some aggressive accounting? Absolutely. I think that this is something that's kind of like built into their growth model, and they got caught a little bit with the numbers, but that's something that I think isn't something wrong with the fundamental business. It's just something wrong at the accounting level, which can be solved. And once it's solved, it's, you know, SMCI will do really well, and all the people who are in there are gonna reap the benefits of it. So I expect tomorrow the resolution of some of these things to come around. And yeah, I mean, bro, I'm all for it. I have a ton of SMCI.
Oh, okay, hold on. How it, like, let's say your SMCI stake went to 0. How upset would you be on a scale of 1 to 10?
Probably like maybe a 2 or a 3. You know,
but it's still enough where you made a big bet on it, essentially.
Yeah, I've made a pretty big bet on it. I mean, but the thing is, like, look, scared money doesn't make money. All right, sometimes you got to take your chips and know when to go all in. So, I mean, I'm not all in on SMCI. I'm just saying, like, I just know right now there's nothing fundamentally wrong with the company. There's just fundamentally something wrong at the accounting level, which can be chalked up to paperwork and everything else. And once that's resolved, it's like the value. My thinking is always the value of the product always outshines the value of certain aspects of reporting, you know, and especially when you're in hyper growth mode, bro, there's going to be revenue recognition issues. Okay. You're growing, this business is growing at 200% year over year. Like, how do you even account for everything? And not to mention you have a multinational supply chain. A lot of the stuff that they described in the short report was very, in my opinion, subjective. They're like, oh, they're not recognizing this. Their auditor leaving them like in the middle was probably the most damaging thing. But in my opinion, it's probably because they didn't want to deal with the correction portion of it. And the fact that, you know, they got someone bigger like BDO to come in, that's also a sign of confidence to me. So
what is the bear case for tomorrow? How do you think tomorrow it gaps down 20%? Do you think there's any world where that happens?
I mean, dude, it's always a possibility that they come out and they say, look, we're not going to be able to file again, and we're going to ask for another extension. If they say that, bro, all hell is going to break loose,
Yeah.
because they've got multiple extensions already, and they've got a deadline of February the 25th. I'm not so sure the NASDAQ is going to want to give them another extension on this, so that would be like the end all, like, holy shit, things are bad, so we'll see what happens. That's the bet we're making right now.
What do you think of Bill Ackman buying $2 billion worth of Uber?
I think he might be onto something in that Uber might be platformized as opposed to like a complete like disruption, right? So as an example, there's already like how many active users on Uber?
150 million.
And so there's keeps expanding that. So like right now, if you go to Austin, they're working with Waymo in order to get the ride hailing service from there. So the thing is, there's a huge amount of work that needs to be done to build up the infrastructure to get to that point where, they have scale. So a lot of these ride hailing companies, they might just use Uber as that ride hailing platform. I don't know. Like, that's something to just keep in mind.
But do you like I mean, this is a pretty heavy bet. Do you like him taking this type of stake? Do you think it's for a recovery, or do you think he legit thinks Uber can be a $500 billion company one day?
I mean, in my opinion, I think that Ackman sees value in the business. Otherwise, he wouldn't be in it, right? But that's the thing. Ackman's also pulled out of companies way ahead of time also. So I don't know. I don't know what to say about Ackman's personal stake in this. I just think there is definitely value in Uber. I don't see it being disrupted anytime soon. I think the thought pattern that they would be disrupted within the next 2 to 3 years by what is it, I think, autonomous cars is still far-fetched. I still see on Twitter, and I'm sure you see it, where there's still autopilot failures where the cars go into poles and, they need interventions. So that kind of stuff, I believe that autonomous driving is not there yet, And,
so on the flip side, what do you think is going on with Tesla right now at 350?
I mean, bro, Tesla's got a PR issue. They got a major PR issue right now. I mean, as much as I want to, I believe in Elon and what everything that he's doing is absolutely what the country needs, it does hit the PR part of Tesla's business because he is a representation of it. I mean, and this is where it goes right back to Michael Jordan when they asked him hey, what do you think about this thing? And he said, well, Republicans buy my shoes too. So the thing is, by Elon being so close to the Trump administration, I'm almost certain that there's going to be a whole set of people that are probably going to be anti-Tesla.
But
right?
do you really think that's the reason Tesla is down from 400? Do you think it's politics, or you think it's earnings?
I think it's the anticipation that the politics will impact sales. So that's one thing. The other thing is the data that's been coming out is that Tesla's not exactly doing the greatest in Europe from what I'm seeing with the numbers.
Yeah,
so,
that's not
so
best. Yeah.
So a lot of people are why take the risk with the valuation being as high it is right now? The favorabilities for EVs are starting to kind of miss also. You see this on semiconductor miss. That on semiconductor always leads me to believe that that's the leading indicator for electric vehicles. A lot of companies are kind of shying away from EV only.
Hold on real quick. What exactly does on semiconductor do in a nutshell?
On semiconductor makes semiconductor chips specifically for EVs. I forgot which part of it, but basically they're in almost all Teslas.
Gotcha.
And I forget what the exact component is that On Semi makes for them, but yeah, it's
them missing to you is a signal that Tesla demand is down. Is your point?
More than not just Tesla, but EVs in general. EV adoption, if it slows down, and Tesla being the leader of the EV adoption curve, that means that they're likely to see the most dramatic dip in demand.
Okay, so that's what we got with Tesla and Nvidia. I don't think the chat got to hear your thoughts on Google post earnings. So, I mean, I bought the dip at 183. Are you buying the dip, and how are you thinking of Google right now?
I'm buying the dip on Google, bro. Google is just on another level of demand. The one part that I definitely missed was, would they be capacity constrained? I didn't think that they would be. but they are, and they've really like listed out a lot of capex. So I think the market is like, wait a second, like you guys are like, I hope this is not one of those 2021 scenarios where each one of the hyperscalers was competing for people and overspending, right? And that overspending resulted in inefficiencies for shareholders. So maybe the market is interpreting some of that, but in my opinion, I think that's wrong. I think Google sees a lot of demand for its services 3 to 5 years out, and they're just building the infrastructure now. They see, like you said, I think AI, we're in the second phase of AI where I think a lot of the models are good enough to the point where they can actually be integrated into the application layer. And that's why we're seeing companies like Palantir, and even Snowflake is almost at 180 something now. Like all these new products are coming out with AI features, and all of them run on some of the models, or they're model agnostic. But the thing is that inferencing is going to play right into the hyperscalers. So I think the hyperscalers know that. They're willing to spend money on it now so that they can reap the benefits 5 to 7 years. Because, that's what it is. You buy the chips now, you integrate them into data centers, and for the next 5 years, you can sell the compute over and over and over.
Right. How are you feeling in general about the economy? We do have CPI coming up this week. That's important. We have January retail sales. Do you think there's any specific numbers we need, or has earnings growth been superb, which, it's been pretty damn good so far, that inflation is just not that much of a concern anymore?
Doge is definitely, in my opinion, going the right direction with government spending cuts. And I think what it is the new tax code is supposed to come, like the new, I think budget is supposed to be done in like March.
Yeah.
Right. So a lot of the spending cuts may come from that. The thing is, remember, when it comes to the economy, the more the government spends, the faster the economy runs. The economy is running kind of hot right now, so we might see a slowdown in growth. But then again, the Trump administration is also baking in tax cuts for longer, and there's what is it called? Like growth initiatives out there as well that could help, like lower cost of energy. So like the government is trying to do this balancing act where they want to cut deficits, but they don't want to slow down on growth. They want both to happen. And I think that's a really hard thing to do. I think we might see more of a happy medium where, spending will definitely slow down, but growth will slow down a little bit too. In which case now you have to ask yourself, with valuations being where they are, how would you want to position yourself? And I don't know, for me, one of the things that's a little bit scary, and this is just me saying this, when retail participation starts to increase significantly, it's usually a leading indicator of a top. I don't personally think that there's a top at the moment, but when I see companies that are pre-revenue or no revenue start to run on like Oklo and some of these other companies like running really fast, like ASTS, they're promising technologies, but at the same time, they're not making any real money yet. And so when I see that, I automatically think to my brain, like, what other time did you see that happen? And that .com bubble comes to mind, 2021 comes to mind, right? So valuations right now are really at a high. So the question that I'm asking myself right now is, when will the musical chairs, when will the music stop? I don't hear it stopping yet, but I'm seeing the signs that there's a lot of people rushing in the door and buying things based on no fundamentals. They're just buying things on, speculation. And the more and more people get into speculation mode is the more of the time that we should be shifting away from equities and maybe into like more fixed income and things that are gonna, weather a recession. And it might be a short recession or a medium recession. And just to counter that, because I think there's a counter case against that, is that we have Trump in the office. And Trump is naturally a person who looks at the stock market as his barometer for success. So if the market does take a dip, I'm sure that Trump will probably push through policies that would likely bring it back up again. So that's why they call it the Trump put. It's such a weird scenario to be in this year, trying to figure out like what to do, like which part of the needle to thread. But yeah, I think this year will be good for people who know how to pick stocks. I'm not so sure the index investors are going to do that well, but I do think that if you really know how to pick good companies, they're in the right areas, you could absolutely kill it in this market.
Yeah, and you do have a point, dude. If Dave Portnoy can pump his coin to almost $500 million in market cap, I mean, there's a lot of money that's out there, and it is hard to ignore that from a speculation perspective. However, to your counterpoint, I mean, if earnings are still going to be amazing, right? Like, how do you weigh that? I guess so that earnings are amazing, but there's all this speculation. Is the answer just pick the right stock and try not to be stuck in a situation where earnings might get worse for certain companies and then everything collapses?
I think it comes down to expectations. Like the more you rely on something expecting it to happen, the less likely it is to happen, right? So if you're expecting like a company to double within the next year, it's very hard to double. But the thing is, when speculators come in around, they think that that's a normal part of the market. And the other thing is, a lot of people who are speculators, they expect a lot of returns very quickly. Like I've had this discussion with a few people, and they're like, "Hey, Kris, what's the next big play? What's the next 10x?" And I'm like, "What do you mean? Like, like I don't know how to tell you this, but there's like companies don't 10x in a matter of like 12 months all the time. That's a very rare occasion to happen." And they're like, "Oh yeah, I guess."
They're like, "Oh wait, Kris, why am I paying for your Patreon then? You don't know the next 10x. What's going on here?"
I know, but that's what I'm saying. But like, the thing is, when you see companies going parabolic over something as simple as news, it means that there's a lot of speculation in the market. And that's not to say that you can't make money in a speculator's market, but you just have to caution yourself and understand that set your limits tight so that when the music starts to slow, you get the hell out and preserve your capital as much as you can, so that this way, when everything is down, you could benefit by buying up stuff on the cheap. Like that. That's why Daddy Buffett right now is sitting on a crap ton of cash.
Yeah. Okay. So what do you think he's going to do with that cash? What is he waiting for, in your opinion?
I don't know, man. He's gonna. I don't know. Maybe he'll. I have no clue at this point. All I know is he's a value investor, and he doesn't see value in the market. And he thinks like the amount of risk that you're taking is higher than the total return that you're going to get from just being in treasuries. So his thing is, why should I go out, risk my capital, especially the amount of capital that I have is like hundreds of billions of dollars. You need to be very, like, with that kind of money, you need a massive downward movement so that this way you can deploy it at scale.
Yeah.
Right?
Yeah.
He can't do the speculating thing, because the only time, like people like me and you, we can speculate on a company, it goes up 40%, we can sell out of it. Buffett can't do that. Buffett can't say, let me buy $1 billion of SMCI and then get out once the earnings is over. Yeah. Right? Me and you can fucking do that because we're small fries. So I don't know, for him to be out of the market and sitting in a lot of cash, he's still collecting a good amount of money, just like about 4 or 5% from Treasury. So he's thinking, like, from a risk-adjusted standpoint, I could sit on the cash, and when everyone is desperate, I'll deploy the money. I mean, then again, he may not even be alive to deploy it. So,
all right, let's do a quick 5 minutes of rapid fire, guys. If you have any tickers, put them in the chat. I'm going to name a ticker to Kris and just get his quick thoughts on it. ELF, recovery or not? What do you think?
Dude, this is something that's very interesting. Someone was asking me about Nike also. And I was like, look, branding is one of those things that you have to have the mind of someone like Chris Camillo, right? Where he's constantly like going through a whole bunch of social arbitrage methods to understand if there's growth expansion there or weakening of demand. So one of the things that I noticed, and I got to credit myself a little bit, I called the top on Celsius because I started to see that the trend on Celsius was starting to get, go down. And so whenever your brand is starting to take a hit, you need to be out of there, So my thing is with ELF and with Nike and all this other stuff, do they have an issue with branding? And if that branding issue is there, how long can it persist? And right. That's something that I have no clue. Like, so right now, if you start to see more, traffic again, with the brand and people like really getting into it, then maybe that's something to buy. But until then, probably not. I wouldn't just buy because like the numbers are like it's quote unquote a value, because that could also be a value trap.
Right. Big Bear AI.
I don't know anything about him, bro. But once again, it leads me right back into what I was saying with the whole speculation thing, right? Like people just buying because other people are buying.
Yep. That is fair. Hims.
Hims is real. I mean, I didn't think that they were going to benefit as significantly as they did with regards to the GLP-1 medications, but they absolutely killed it. And I made the wrong bet. You remember when I had my thesis was on Weight Watchers? It should have been Hims.
Yeah.
It should have been Hims because I knew that the GLP-1, especially the compounded GLP-1s, was going to be a big market. But I made the bet on the wrong horse on that one. So, Hims was the correct one to go with.
PayPal.
Once again, it's like I feel like PayPal's a value trap. I don't know. I was short PayPal for a little bit, but I got out of my short position because I thought that they would have a massive problem because of their honey thing. But that just seems to it got blown under the rug. It's like, whatever. No worries. No one cares. So I was like, okay.
Okay. Path, UiPath. Any thoughts on that?
I mean, RPA is really a big thing. I don't know. Remote process automation, like, it's just, I don't know the value of it, especially in the AI world. I mean, I'm sure that there's probably use cases out there, but it's nothing that seems like transformational to me that UiPath is worth putting some real money towards. So I don't know.
Do you know this one? Aurora Innovation, AUR.
It's robotic process automation. Sorry, not remote. Robotic process automation. Say that again.
AUR, Aurora Innovation. Do you know this one?
No clue. I haven't heard of them.
Okay. AMD.
AMD, I think a lot of people are very bullish on AMD because they think that AMD could one day challenge, they would benefit from inferencing. I think a lot of people are seeing this CapEx demand and they're saying, well, eventually that's going to make its way into like the coffers of AMD because AMD has still some inference, the growth driver is going to be inferencing. But I don't know, like for me, when I look at it, I look at it from like 3 layers. Number one, it's ARM versus x86, and ARM is winning. And AMD and Intel are both ARM-based architectures.
Yep.
And then you have AMD, which is doing better than Intel, but they're still there. So I don't know. I think I think AMD is like the middle one. So I think Nvda is probably going to be like the major winner long term, but the valuation on Nvidia is like super, super high. And if we do see a cyclical top eventually, we could have a problem with even Nvidia, AMD, and Intel. Like people forget about that semiconductors are cyclical. So let's say this year, all the big tech companies are spending all this money. But what if like next year they say, you know what, we have enough chips, or we have enough data centers. We don't need any more.
Right.
Like Google, AMD, Google, Amazon, Microsoft, and Facebook, they can't spend this level of CapEx forever or indefinitely. I think eventually that CapEx is going to come down. And when it does come down, the main beneficiaries of the current run are also going to be the main the ones that are going to have the most problems. So we'll see.
A couple more ones, Kris. SoFi. Any quick thoughts on that?
Not really. I haven't looked at SoFi really that much in a while. It's just, to me, I don't see the big differentiator that gives SoFi a ton of upside. I mean, they are doing better in terms of their financials, but once again, so all the other banks are up too. So it's not like, oh my God, there's some kind of alpha that SoFi has that other banks don't. The only one that I do have a position in is Nubank. And I think Nubank is a completely different beast in that they're growing like crazy in Latin America. So they already hit a significant portion of the Brazilian market. They're in the process right now of expanding significantly in Mexico and Colombia. And I think there's going to be other markets that they start touching. And they're in hyper growth mode. So, and some of the capital investments that they've made in something like Time Bank, which is like South African and the Philippines at a very, very low valuation relative to the total market potential. It could be very, very value accretive to shareholders. So I really like the current CEO over at Nubank. And see that day that TJ freaking bought $100,000? He's already up 30-40 grand on that.
Yeah. Yeah.
So I think Nubank is the one to really watch out for long term. They have a very up and to the right business. Really, like the founder is great. the company's being led by some amazing people. If you listen to this interview that they had not too long ago, maybe I'll send it to you. Really, if you get some time, listen to it. You'll see like the makings of a major bank in the future. So,
last couple, Archer. Any thoughts on this one?
Archer and Joby are interesting in that EV tolls, like in my opinion, were left for dead. Like I really didn't care. I was like, I don't think these things are going to make any sense. But this is typically what happens whenever like new companies come around. You're going to have like 10, 15 like entrants, and then eventually the strong survive and the weak die. Like look at Lilium. Lilium's done.
Yeah.
They went bankrupt. Right? How many other ones? Like there were like quite a few at one point. They all went bankrupt. Right? So the ones that are surviving right now are Joby and Archer. And if they can actually commercialize their aircraft, they could do pretty well. It's just right now they don't have a single thing running. So it's really hard to value a company that doesn't have a business model that's put together yet.
Would you get excited for Take-Two before Grand Theft Auto, or you think that's kind of priced in?
Yes, I am, bro. That is one of my biggest regrets, man, that I did not go heavy on freaking spreads on Take-Two Interactive for 2027. I know for a fact Take-Two, I think Grand Theft Auto is actually going to slow the GDP down by a couple of percentage points because everyone's going to be like, I'm taking like a month off, or I'm taking 2 weeks off and then just playing GTA. I think there's going to be so much streaming happening of GTA. There's going to be, dude, they've got a cash cow. Take-Two has a cash cow for the next 10 years. Okay. That is how
dude,
big.
Isn't that serious? It's just
yes.
Is it like that? It's
absolutely, dude. Amit, imagine right now, there's like how many people actually play Red Dead Redemption? How many people play the original GTA 5? How many people are like, there are so many verticals to this. And all they've been doing is taking all that capital, punching it into this game. And when this game comes out, brother, I'm telling you, there are going to be massive demands. Massive demands.
Are you gonna take off from work and play the game?
I'm actually considering it. I'm not gonna lie. I'm considering it.
Yeah, see, I've never been a big gamer. I played Vice City a while ago, but I never got super into it. So.
That's another thing. That is another thing. I grew up, my entire generation, and I'm sure there's people in the chat right now. I mean, how many, like, if you are between probably 35 and 45, you grew up playing games like Grand Theft Auto, and it's coming back to Vice City. Bro, just the nostalgia factor alone is going to see crazy amount of sales. Yeah. And then if they have like an in-game, like system, they're going to keep generating money, man. And the entire planet is going to be playing this thing.
Sachin right here in the chat says, during my peak gaming days, I used to spend 300 hours on one game.
Yeah.
Well, yeah. All right. I can't keep Kris on forever. Kris, I'm going to give you like 3 last ones. Shopify.
I don't know much about Shopify. I've never been interested in Shopify, so I can't really answer much to it.
Okay, Baba.
Okay, so you know me, I love China.
Oh, right wow, now, it's up 6% today. It's up 5.4.
I know. A lot of people gave me a lot of grief about China. I think China's in recovery mode. I think there's still a lot of alpha that's there, but I'm not trying to bet on one company. Instead, I just bought a bunch of FXI spreads. So I'm good with that position, Okay. So I'm just buying the index in China and just letting the market do its thing. And Baba being probably like a pretty big position within that index, I'm cool with it. Let it do its thing.
All right. Last one. And I know you don't like talking about it, but people really do want your opinion because people are getting concerned about valuations, all that stuff. Pltr, I mean, how do you explain what's going on? And do you think this crashes and burns, or can this continue to stay this high?
I don't know, man. Like the market can stay rational longer than anyone can stay solvent on this thing. And I think they're in escape velocity mode right now with regards to like just the amount of interest there is in AI products. So until that interest wanes, their growth is going to keep happening. And it's just going to be confirmation bias after more confirmation bias. And people don't care. Like right now, if Pltr grew at a very significant pace for the next 5 years, people would still be overvalued. That's the level of overvaluation that's
Do you think the stock has taken a life of its own and the numbers aren't really what it's trading on anymore?
Yeah, I mean, it's pure speculation, man. In my opinion, it's speculation. So I think a lot of people are speculating on this, and it's, you know, if that's what you want to do, if that's how you want to invest, then by all means, go ahead and do it. So I think a lot of it is just speculation. So me personally, I know there's going to say, oh, you missed out on a 10x. I slept really well for the last like 10 months, 11 months. I'm happy. That's what matters to me. I'm no longer an investor where I need 10x's to make, you know, investing worth it for me. I can take the 20% here, the 15% there, compound all of it together, and boom, I'm doing really well for myself. So if people need to have that kind of return and you wanna take some big bets, go for it. I'm not so sure Palantir at this level is the right time to do it, but once again, I don't control people's.
Yeah, I mean, look, you've done well regardless of Pltr. A lot of people have done well on Pltr. I think the big question right now is, are the institutions FOMOing? Because we know there's FOMO happening. Is it institutional or is it retail? And I think that's
it's just retail. I think it's just retail.
Yeah, I guess
think retail's leading the way, and you know, there's indexes that probably have to add to, because you know that's how it works now. If you start to get, it's almost like this perverse system where if you have people buying your stock, the market cap goes up, and then when the indexes are rebalancing themselves, they have to buy your stock, even if the value is absolutely bonkers, you know. And then it becomes a bigger and bigger portion of the funds that are existing. So when it comes to index investing, especially when it's based on just market capitalization, I feel like that can distort markets as well. So I think that's why we're seeing some level of market distortion. So
I think that's fair, but I do think this type of a move is not retail. I personally think the retail that I talk to are selling, or they're at least trimming. So I think these are the big guys that missed it, and they're getting a little bit more excited. That doesn't mean it's not, you know, incredibly volatile, but I do think some of the big guys are coming in. Piggybacking off Palantir right here. Last question for you, Kris. Anduril looking like they're going to raise at $30 billion. I mean, is this going to be the hottest IPO that you're looking forward to get into, or what do you think?
Yeah, I think Anduril is going to do really well. I mean, they're a disruptive defense company. I think there's a lot of potential for Anduril going forward. So we'll see what happens with regards to that. I think the management over at Anduril is really run really well. They're trying to do things that are more Silicon Valley based, where they provide way more value for not just for the shareholders, but for the taxpayers. And one of the things that we're seeing right now with the whole Doge thing is that, you know, we want to be as efficient as possible with our capital, you know, with our spending. So, you know, a lot of the projects that we've, like literally the Department of Defense, I don't know how many trillions of dollars they've spent on the F-35. It's crazy the amount of spending that we've done on certain capital projects, and we're not in any safer of a position, you know, and the wars tend to evolve. So why are we still buying technology that, you know, it's like, the way that I would describe it is that in the modern warfare scenario that we're seeing, especially in Ukraine, you're starting to see like a $10 million tank versus a $10,000 drone. Now, just think about that. You're losing $10 million against a $10,000 drone, not even $10,000, like a $1,000 drone, you know?
Yeah.
So the question is, why do you want to buy like 150 tanks? Like, wouldn't it just be better to build systems like loitering munitions that Anduril sells, you know? So I think war is evolving, and Anduril is on the cutting edge of war. I think they're actually more in tune with the war fighting needs are, and I think that's their alpha compared to like the old heads who are still stuck in their old ways. And so, especially if the DoD ends up going into a more like how do I say it without sounding like too much of a bear? The DoD has this thing where they spend a lot of money on like useless shit. Okay. And their budget has never really been taken a look at like that hard. And they've I think Elon said it the best the other day. He's like, we're spending more now than we were when we were in 2 wars at the same time.
Yeah.
Like how do you spend more during peacetime? That doesn't make any sense, really.
That's
So
a fair point.
I think the thing is, if Andrew can provide the military with the right tools, it's worth it to not have to spend all this extra money on things that are not going to work out well. So yeah, I think, but it's all going to be based on the Trump administration and Elon and the people like Pete Hegseth coming to terms with, hey, like maybe we don't need to spend billions of dollars on a piece of equipment that may not exactly provide value. Instead, let's kind of like adopt technologies that give our war fighters 10x capabilities rather than, like if you think about like an army, like back in the day, you'd need like a 1,000,000-man army to go invade a country. Now you could probably take over a country with, a couple of battalions, especially if they have like the right technology behind it, so.
All right. Chris's Twitter in the chat. You're streaming SMCI tomorrow, right?
Yeah, me and Matt are going to be streaming SMCI. If you haven't followed the Cash Flow Chronicles on YouTube, yeah, you'll get our thoughts, and hopefully we'll all be celebrating or we'll be crying together. So,
all right, we're either going down with the ship or we're going up in glory. I'll see you tomorrow, Chris.
Yep.
Thank you.
Take care.
Appreciate it. Bye. All right, Nvidia 134.3. Rest of the market taking a little bit of a sell-off with some recoveries here. But Nvidia is still going green. Netflix, look at this bad boy, 1,024. I mean, just not slowing down. I do think they will do a stock split on next earnings if they continue to climb up. With them and Costco, both in the $1,000 member club. T-Mobile up 2.74%. Apple at 230. Affirm continuing its momentum from last week. They had a great earnings up 4%. Look, I agree with Chris on the perspective of there is a bit of froth in the market. I think that's undeniable. Like when Dave Portnoy can get a coin up to almost $500 million, that is pure froth. The question is, where is that froth coming from? Is it coming from money markets? Is it coming from savings accounts? Is it coming from people selling stocks and they have disposable income? And if that money continues to exist in the system, but the earnings growth lives up to results where money can be allocated against those companies or against those cryptos that have catalysts like a strategic Bitcoin reserve, then I do think the froth in the system can continue to remain, which is basically what Chris said, right? Like it is frothy, but if you're in the right name, that froth can continue to be elevated. The question is, does anything on a macro level break all of that froth and make it leave the system, which a recession would do that. Really high inflation would do that. Earnings growth being bad would do that. So far, we haven't had any of those things. So far, markets have been pretty strong. Pound to right here, 112.57. So I think we're going to have to see. We're going to have to see over the coming months. We do have CPI on Wednesday, folks. That's going to be very important. So CPI on Monday or Wednesday, that'll give us a little bit more of an inkling on if inflation's coming down. Tesla right here, 361. So Tesla was at 350 today, gapped up to 361, basically about to go green in the next 20 cents. So we did have dip buyers come in at 350 to save it from going lower, but right now we're here at 361. Did you sell your Rocket Lab? No, I still have my Rocket Lab. Rocket Lab, is it up today? Rocket Lab 20. I've been waiting to add to Rocket Lab, but I just I kind of need a little bit of a dip to add. And this thing is stagnating exactly where I bought it at. I bought it at 28.91, but basically it's at 28.40, right? So I don't know. I guess earnings is going to be the catalyst for Rocket Lab on if we go higher. I know they got a couple deals over the past couple of weeks and those have been good, but that week where it pumped 30%, I think everything's been priced in since then, and it hasn't really moved since that move, which makes sense. I mean, that was a big move. It's actually doing a really good job consolidating here, maybe forming this as a base. I don't think we've seen below like 27 in like 3 weeks, right? Yeah, low was 27.36 on February 10th or today. Let me go to 3 months. Yeah, the low was 24 January 21st. And then since then, we have not gone below. We hit 26.50 for a brief second that day when the DeepSeek stuff happened. Everything else has been relatively strong for Rocket Lab. We got 134 in Nvidia. Again, we still have, I think, 475,000 shares at 135. So resistance at 135 is still strong. 514,000 shares now. So it's going to take a little bit of work to get above 135. Hood just slightly going green. SoFi, nice move today. Google, nice move today. Rocket Lab again up 4%. Baba, great move today, up 6.7. Take Two, it's interesting, the Grand Theft Auto stuff. I was really addicted to Grand Theft Auto when I was younger. I don't know if addicted's the right way. I mean, I like playing it. I don't think I was like spending that much time on it, but I had it on my PlayStation Portable, my PSP, and I would play it here and there, But since then, I kind of grew out of it. But I think Kris is right. I mean, that game is going to set this company up for the next 10 years. There's so much nostalgia around it. The question is just going to be how it factors into their overall earnings growth, but it absolutely is a catalyst. AMD right here up 2.6, UiPath's up 4%, PayPal's up 2%. Big Bear now goes red. This is one of those examples Kris was talking about in terms of froth, although it is a short squeeze, so that one algorithmically could just continue going higher. SMCI holding on to 7%. ELF goes down 1.5%. Snowflake 185. MSTR up 2% on the day. Take a look at KC. What is KC? Kingsoft Cloud, that's up 8%. I will put this on my list. I do not know about them. Price to sales of 64. That's a bit aggressive. Market cap of 4 billion. Definitely a small cap. Looks like this one's pumping on some news today. I'll take a look at that one. GSAT, Jed is saying, look at GSAT. GSAT is Global Star. This one, 3 billion, also a small cap. If I'm not wrong, they do satellites. If I'm not wrong, Jed, let me know in the chat. I think they do telecommunications and satellites. I could be wrong, though. But I think that's what GSAT does. Any predictions for Rick earnings after the close today? I didn't know Rick had earnings today. Also, by the way, guys, Jason just texted me, and he said I might not be able to do the market close because he has like this webinar thing that he's doing today. So we might not have a market close today. Yeah, he said, I forgot I have a webinar after the close. So that means the studio might not be available for me. So if I make it back to the Airbnb in time from my meeting in the morning, then yes, we'll do the market close. If not, then yeah, we're probably not doing the market close today. So we'll see later in the day. Rick right here. So Rick, for those that don't know, Rick is they own strip clubs in America. Look, I think it's been a good 2024. People have disposable money. I think Rick's going to crush it. I think people have plenty of single dollar bills they're willing to throw out in these clubs. So I know nothing else about the business other than it's a strip club joint. And I think, or it's a holding company that owns a bunch of strip clubs and people have money. So if some of that money goes to the strippers, Rick is going to do well. Wow. Pltr 113. Pltr 113. They can throw pennies. Pennies are rare now, dude. It's going to be more rare and rare when we see pennies. Wow, Pltr, bro. 109 today was the bottom. I mean, this amount of strength on this, goodness gracious, it is just unbelievable. It's quite exceptional. It's quite exceptional. I mean, the market does not care. It just does not care. They do not care. We will do some Rick DD for you in Miami. I'm down, Brett. I am down whenever we do Miami. What else? Baba's up 6%. Shopify's up 3%. Nvda still holding on to 134. I think if Nvda can close above 134, I would be very happy. Also, retail sentiment, as Kris was talking about, it is strong. It is strong. I mean, retail investor sentiment is a new high. It's higher than it was in 2021. So when you talk about buying the dip, look, there's a couple things that are happening. Either retail's buying from institutions, and that could be setting up to be ugly, or institutions are buying with retail, and that means everyone's on the gravy train of, yes, we're in a bull market. Or retail is just more self-directed investing is happening, and people, and I've heard many stories from you guys, are ditching their financial advisors and they're taking control of their own brokerages. And that just means that there is a little bit more aggression when it comes to people managing their own money. So could be one or the other. This article came out over the weekend as well. South Korea's National Pension Service initiated position in SMCI, increased their stake in Palantir and Target, and they sold Chipotle. So South Korea, which has one of the largest national pension funds in the world, they bought SMCI, added to Palantir, added to Target, and sold Chipotle, which is, definitely proves there's some value people are seeing in SMCI. They're continuing to add in Palantir. And then Chipotle had kind of crappy earnings, so I guess they got out of that. Tesla right here, 360, Palantir 113, Robin at 55.97, Alibaba 110, and then you got Nvidia 134.4 on the day. How do you guys chat so much? Am I the only one with a day job? Dude, it's because everyone in this chat works from home, and they they spend one of the 8 hours doing the work, and the other 7 hours are figuring out how to make a shit ton of money in the markets. And that's how everyone chats so much. That's literally it. It's like 95% of people here work from home, and they move their little mouse on their Microsoft Teams to show that they're active. But in reality, they're just staring at Palantir and Nvidia and Tesla all day. So it seems like that's what's happening. Mark, thank you for the $20 super chat. Wars has layers. For instance, all the unarmed drones malfunction. You have secondary layers like artillery, APC, etc. You'll be wiped out, so you need tanks. I was in Iraq in 2003. First of all, Mark, thank you for your service. And you make a incredible point. I mean, there's going to need to be a lot of supply that we need, even if we were to get into a war. Hopefully we don't get into it, but just to prepare for getting into it. I think Palmer Luckey's stat is that if we got into a war with China, we would run out of ammunition within 7 days. And so that alone, I think, will create more of a inclination for DoD spending, and the beneficiaries of that really could be Palantir and Anduril. And we also have NATO. We have NATO companies or NATO countries that Trump wants them to spend a lot more. If that continues to happen, or at least starts to become more aggressive, who knows? Maybe Palantir and Anduril will catch a bid internationally as well. Okay, let's get an update on JPAL CPI coming this week, and then we'll keep going from there. But let's get some stats on that, and then we'll keep moving.
Although still somewhat restrictive on balance. And then over the weekend, the acting director of the Consumer Financial Protection Bureau gutted the regulator, suspending nearly all activities, halting funding, and closing the offices. That, of course, has signaled a more lax landscape for the banking industry. And this week, worth noting, there are several financial services conferences, one hosted by UBS that begins today and extends to tomorrow, another by Bank of America. Top executives across Wall Street will be speaking, and we'll be covering both of those and any market-moving guidance or themes that come out of them, guys.
What do you think the story is right now? Is it about markets and trading, or is it more of a rate environment story for all these names?
Yeah, markets and trading were so strong in the fourth quarter. There will definitely be a follow through on questions there, although a lot can change over the course of the quarter. It can be a little challenging to give guidance on markets and trading specifically. I think investment banking remains a huge question mark in the minds of investors, because they were coming into the year expecting this kind of gangbusters revival of the capital markets. We'd see this, surge in IPO activity, surge in M&A activity. And as we're talking about, that hasn't really come to fruition so far. We're only a month into the year, a month and a half.
It really hasn't happened yet. And so we need IPOs. Hopefully by March, April, we get them. But so far, we have had very few IPOs or M&A. And once we get them back, that could be a big bid for financials.
Half into the year, but we haven't really seen some of that revival that we've been talking about, and we've seen some head fakes on that revival over the last few years, where we heard about the green shoots, and the green shoots weren't watered, and then the election was supposed to kind of unleash these animal spirits, and it sounds like the animal spirits are still percolating under the surface in conversations I talked to, but so far we haven't seen this kind of onslaught of activity, which a lot of people have been waiting for. So maybe it's still under the surface and it'll still bubble up, but I think people want updates on what that activity is doing.
Morgan Stanley is noticeably weaker than the others this morning, down 2.5%. There's a story, I think, over the weekend about what their positioning is. And speaking of investment banking, it's been towards the top, right, with gold.
Yeah, again, it comes down to IPOs and M&As and one that's coming out, because we haven't had them yet. So the bid that like Tom Lee's been talking about when it comes to financials, it really does depend on those two sectors of the market coming back. And there's a lot of companies, Klarna, Discord. I mean, there's so many, Anduril, obviously. But when do they actually go public? That's going to be interesting. Also, historically, when there's enough liquidity to buy up IPOs, you tend to have, it's there. Like there's plenty of money, and that's when people call it the top. Like when Databricks can go public at 100 billion, that's when people are like, all right, we got a little aggressive here. But if we're in an AI boom cycle and there's plenty of money and there's plenty of growth along with Trump, then maybe this time we start to see more momentum with IPOs and money that can handle it, and earnings growth that can justify those valuations. We are 5 cents away from 114 on Palantir, 2 cents away. There we go, 114. 114 back to 114 on Palantir. Folks, We got to ring the bell. There we go. 114 on Palantir. Nvidia 134.64. I think Nvidia wants 135. I think she wants it. I think she wants 135. SoFi as well, doing great. 1540. Google 188. Rocket Lab 2837. Hoodie just below 57. A $57 close would be awesome today. And then Palantir holding on to 114. Resistance for 115 on Palantir is 62,000 shares. So Palantir kind of going right back to where it was on Friday after it fell from 116 to 110. I mean, it kind of just looked like a regular Friday sell-off, and now getting a bit of recovery. Broadco's moving. Broadcom. AVGO. Yeah, they should be moving with Nvidia. Yeah, they're up 3.4 as well. SMCI, Broadcom, and Nvidia today in the semis are doing great. SMCI, dude, it's almost at $40. Let me check resistance for 40 on SMCI. Resistance for 40 on SMCI is going to be 283,000 shares. Okay, so that's definitely a big wall. But let's see if that can go over. Are we about to make 115? Where are we? 120? Dude, if we can imagine we hit new all-time highs, we got to break 116.3 to hit new all-time highs. It's just wild, bro. Absolutely wild. But nonetheless, the market likes it. The market still likes it. Yeah, BlackBerry as well. Again, congrats to those that are in this one. Great day for them, up 7%. This one's low float as well. So with the low float, if the narrative catches on, retail gets in, this one definitely could continue to pump and go higher. Nubank's trying to get 14. SoFi is trying to get 16. Intel 20. Snowflake 185. Oklo going green on the day. And then you got Netflix still holding on to 1,000. So it's one of those, it's interesting, dude. It's really interesting because, again, the playbook going into 2025 was be defensive. And what we are seeing is anything but defensive. I mean, we are seeing risk freaking on, like aggressive risk on too. It's not like meme coins pumping type of risk on, which means equities that have some level of potential. If meme coins, which have, kind of zero potential, there's nothing to them, they can catch a bid. They can catch a very aggressive bid. Let's get an update on sports bowl betting, or sorry, not sports bowl, Super Bowl betting as well. It cost $8 million to have a 30-second ad in the Super Bowl. So you definitely had a lot of people advertising and taking up that offer. Here's an update on the sports betting, and it broke some records here.
The winners when it comes to last night's Super Bowl. Contessa Brewer is at HQ with a look at the sports betting landscape. Contessa.
Yeah, that was a really stunning Eagles win there, 40-22. And now we're getting a big picture, stunning look at betting for the Super Bowl from GeoComply. 14% growth in active player accounts over the weekend, up from last year's big game. It was
this, by the way, might be the reason Robinhood wants to get into sports betting. I mean, I don't think they're going to yet, but this is a big market that continues to grow.
more than 724,000 new online betting accounts. Just before halftime of the Super Bowl, right after the Eagles scored their third touchdown of the game, GeoComply recorded a peak of 14,300 geolocation transactions per second. Now, Circa Sports CEO Derek Stevens told me in the wee hours of the morning that he saw a record Super Bowl Sunday for both handle and win, that the sports books benefited from the growth in prop bets and the fact that there were no touchdowns from popular players like Saquon Barkley or Travis Kelce. Before the game, Caesars said a bettor at the sportsbook in New Orleans made a $250,000 bet on the Chiefs to cover -1. Oops. Though the Eagles' wagers were slightly outweighing the Chiefs' wagers just before kickoff. Caesars says it had the biggest in-game handle ever for a Super Bowl, the amount of money wagered increasing because of that lopsided score at halftime. Bettors were just piling in to gamble on a Chiefs comeback.
I wonder if, so that's the update on sports betting. I wonder if DraftKings caught a bid at all. TKNG. No, that's flat. Interesting. Yeah, I mean, looks like sports betting is real, folks. And I don't do sports betting, but people I mean, those numbers are insane, bro. 2 million new accounts. Like people, did anyone in the chat bet on the Super Bowl? Did anyone win? Did anyone pick the Eagles? I feel like Eagles were the underdog, right? So like you got a big payout if you pick the Eagles. Pltr right here, 114.70. But the Chiefs definitely did not, live up to the expectations that a lot of people have. Robinhood buys DraftKings 2025. I don't think that's going to happen. I don't know if the regulators would allow it, but Hims did do a Super Bowl ad. Yes. Oh, is Hims up right now? Yeah, I heard Hims' ad was the best one. OpenAI's ad was weird, bro. OpenAI's ad was like, okay, let's watch the OpenAI ad together. Let me know if you guys think the ad makes sense. I thought they could have done so many more creative things with it, but this was their ad. Actually, let's not play the audio on the ad. I'll just talk over it because it's probably music, but here's the ad OpenAI had. And as you can see, it starts off with these dots and then it goes into this thing. And if it, like, my mom would not know what the hell is going on, right? And I feel like a Super Bowl ad is meant for like the average person to just get it. I didn't like it. I would have just put up a chat box and asked a bunch of questions that are like cool questions and immediately got the results and tried to show that this is the new way that people should do search. Like, I just don't think regular people that are not in the technology sector would understand what the hell's going on here. So I didn't like it. Yeah, it was 8 million for 30 seconds. 8 million for 30 seconds. Or if they got a celebrity or something, like I don't know, this feels too techie. Like they needed something that's more relatable, in my opinion. So what does all this have to do with OpenAI? This is OpenAI's ad. That's why we're looking at it. So this was their pitch to go to ChatGPT. I don't know. I don't like it. I thought it was kind of boring. They tried to do an Apple 1984. Yeah, it didn't exactly match the same. Broadcom up 3%. Palantir, she wants 115. Nvidia trying to go for 135. Rocket Lab 2848. Tesla still red. Hood goes red 5583. Baba's a big winner today. Take Two's up, and then Shopify right here is up 3% right now. they needed a funding round for that ad. 8 million is nothing to OpenAI, but still, it's just, I feel like personally there could have been a better opportunity. There could have been a better one. Google, where's Google today? Google right here is at 187. Nice little rebound from 183. Amazon as well, back into the 230s, I believe. Yeah, 230. Amazon's literally back to where it was on Thursday morning before tanking like 5%. So looks like the street didn't care too much about Amazon. Kanye had an ad as well. Dude, Kanye, he's deactivated on Twitter. I don't know if he got banned or he got out of it, but Kanye's Twitter account over the weekend was interesting to say the least. But he had a video where he just said, go to his website to buy his clothes. So nothing too crazy there. 8 million is like 1.5 DeepSeek. Yeah, that's hilarious, dude. Like, the thing about the Super Bowl is that it is the one place, Palantir right here, 20 cents away from 115. It's the one place where spending money on an ad actually makes sense on television because people actually watch it. You know, other television commercials they don't care, right? They just go on their phone during that time. But Super Bowl, everyone cares. And so if you nail your ad, you can like really make an impression on people and dramatically affect your sales. But it just depends how creative you are on the media. Okay, what else do we have going on? What other headlines are we looking at? Nothing too crazy across the street. We talked Super Bowl. Let's get I feel like we should get a little bit of an update on crypto as well. We saw Joe Lonsdale talk on Friday about Palantir, and he was kind of making the same argument that DoD spending is going to be really good for Palantir and Anduril, which is why that's caught a bid. Tesla right here, 361, finally going a little green. Palantir 114, Nvidia still trying to hit 135, and then Amazon 233 right now. Amid SMCI is on a tear today. Is this the all hype before earnings? I definitely think it's hype before earnings, but I do think there's some truth to the hype. I don't know, bro. Either we're going to be dumb for not selling it before earnings on this pump, or earnings takes it much higher. I guess we're going to have to find out. We are going to find out. GameStop right here, 26.39. That's up 6.71%. So you got GameStop going green. Amit, does Palantir have a presence at the Paris AI Action Summit being held today and tomorrow? So I heard about the summit. I don't know if Palantir is going to be there. I think we can find out on their LinkedIn. There'll probably be some people posting about it. But I don't know if they're going to be at the Paris AI conference. Palantir. Wow. Holy crap. Well, congratulations, folks. We are back to 115 on Palantir. I mean, there you go. There you go. Someone says they saw Palantir is going to be there from LinkedIn. All right, so Palantir is probably going to be there. Then I'll try to find the post as well. But makes sense that they're going to be there. Wow, dude. Holy crap. That was, I mean, talk about the rebound, bro. Momentum is not slowing down. 116 resistance is 41,000 shares. 41,000. Strong, man. It's strong. Narrative is strong. It is not dying out in terms of the momentum, at least not yet. There are plenty of buyers willing to. I mean, the fact that people are buying it at 114 means that there's buyers at 110, 111, 112. There's probably going to be buyers at 104, 105. Like, this thing is well into the 100s, and it would need a pretty epic correction for it to get down from the hundreds. It's possible, but doesn't look like it wants to get there. PAF, that is correct. How do you come up with that resistance number? I just look at the order flow on level 2 for NASDAQ book volumes, and then you can see the exact number, which is not literally the exact number, but it's like close to what the number looks like. It's not the size of the bell, it's how you ring it. Yes, exactly. All right, so let's get this update right here on Bitcoin and see what's going on there. And then we'll keep going from here. Nothing else too crazy going on, guys. Everything's pretty much, it's kind of a chill Monday. And it's kind of right. Actually, let's listen to this. Let's listen to one of these analysts that I actually like listening to, and then we'll get the Bitcoin. This is PIMCO on US equities outperformance in 2025. Any input on AppLovin before the earnings report? So AppLovin, I don't know enough about the company. I know they surged in 2024. I'm not sure if it's overvalued or undervalued. I would imagine their earnings growth is phenomenal, or it has been at least over the past couple of quarters, which is why they got this surge. But it's up, right? And given it's up so much going into earnings, we're going to have to see how earnings plays out, but not sure about the actual fundamentals of the company.
Writing the following: recent macro data and earnings reports indicate a US economy that continues to outpace other developed markets. We maintain an equity overweight concentrated in the United States. Aaron joins us now for more. Aaron, welcome to the program. Let's start with that. And let's start more broadly as well with just some of the consensus positions coming into 25. We've upended a series of them. US versus Europe, for the dollar bulls, for the bond bears. There's been plenty to think about. Do you think they're just position squeezing or something else, something more?
I do. I mean, I think that, coming into this year, the markets were, broadly speaking, pretty long dollar, short bonds, and long equities, but long probably U.S. equities over the rest of the world. And really, none of those trades have panned out. Europe has outperformed the U.S. Bonds have basically gone nowhere. And similarly with the dollar, I think a lot of that is just a little bit of position squeezes going into what was, fairly crowded positioning in the beginning of the year. But when you step back, I see very little reason for the rest of the world to outperform the U.S., particularly under the Trump administration's policies that they're pursuing. But also, if you just look at growth dynamics and inflation dynamics across the world, the U.S. is clearly continuing to outpace and outperform the rest of the world, which, really would give way to the U.S. equity market outperforming the rest of the world as well.
Which is another hedge to the argument about froth. I mean, where else are you going to put your money, right? So is there froth? Yes. Where else do you put it? You're not putting it in Germany. right? I mean, like maybe you'll put it in India, some of these emerging markets, Southeast Asia, but really it's the United States.
And, while certainly the Fed has paused relative to other central banks, what you're seeing now is probably more fiscal out of the U.S., which ultimately is what is going to drive the economy more so than central bank rate cuts at this point, at this point of where we are. So I think that the U.S. is still, front and center, the main outperformer within U.S. equity markets. And I think that U.S. domestics particularly are what's going to outperform this year.
So Mislav Matejka over at JP Morgan in Europe, Aaron, made a similar point, that for this trade to work the way it has been working over the past few weeks, you need to close growth differentials. And there's no sign of that happening just yet, which takes us back to the US and your call. So let's sit on the US equity market and think about what's working, banks, what's not, certain parts of tech. What do you think will work in the year ahead and why?
So I think staying as domestic as possible is going to work. So financials, I think, are going to continue to be an outperformer this year. Also, the power utility names, particularly those that are leveraged to the AI trade, I think those names still work. Clearly, they took a little bit of a breather in the beginning of the year and late last year, but I think that position is actually really attractive to re-enter right now. I also think that some U.S. cyclicals, consumer cyclicals will work, but I, really stay away from any cyclicals that have international exposure. Energy sector, I also think is going to do quite well this year. What won't work? Industrials continue to forestall any type of CapEx investment. They've now pushed it out another 2 quarters to the end of this year. Business CapEx is underperforming relative to, or business sentiment rather is underperforming relative to consumer sentiment. And so I think that, what anything with international exposure that is going to be front and center with respect to tariffs is likely going to underperform. And some of the more deep cyclical materials, mining, industrial sectors are likely in that bucket. Whereas the ones that are more leveraged to the consumer are likely the ones that are going to outperform this year.
I think that's a fair take. Going back to the America is the best argument, just given we have all the companies and all the growth right now. A lot of money still ends up flooding into the U.S. Pltr right here at 114. J-Pow is testifying tomorrow in front of Congress, so we can watch that at 10 a.m. tomorrow. That's not today, but that is tomorrow. By the way, holy crap. Portnoy's coin just tanked 85%. Oh my. Went from 11 cents in the morning to 3 cents. It was 17 cents yesterday. Goodness gracious. I wonder if he's tweeting about it. But we will have CPI on Wednesday. So we have JPOW tomorrow and then CPI on Wednesday. Pltr just passed Wells Fargo's market cap. We are at 39 on the number of companies. We're at 261 billion, number 39 in the United States. So we have just passed Wells Fargo. Yeah, Portnoy hasn't said anything yet, but there you go. That coin has collapsed now. He must have made a good profit. Well, he said he wasn't going to sell until 500 million and it never got there. So don't know if it does. Tesla right here at 359, Amazon 233, Google 187, and Pltr at 114. Amit, do you think Tesla bounces back in the short term? I don't know. It's confusing because, to me, what would make it bounce back is the narrative on FSD and robotics getting more steam and momentum. And I think that's enough to make it bounce back. I don't think the stock is really trading on the numbers, so I don't think it matters. But if it breaks down, we've seen Tesla break down many times, right? Like this has happened at least 4 or 5 times in the past couple of years where it gets a lot of momentum and then it breaks down. I don't know. I do know that probably around April, I'm going to have a bit more cash because I'm going to sell the remaining of my HUD options, and A, because I have to pay taxes, but B, just because at that point I'll just exit the position. And so I'll have some money to deploy more aggressively if we have Tesla at a really big discount around that end of March, early April timeframe. But I don't know. I don't know. The thing I really think the reason it's tanking is, yes, I think the Elon political stuff might have something to do with it, but I think the German registrations and European registrations are down so much that the street's just looking at these numbers and they're like, okay, there's no way that Q2's numbers can be better than Q1 or Q4. The Q1's numbers are not going to be better than Q4. And Q4 numbers sucked. Like they were just abhorrent. They were so bad. But no one cared because it was the thesis. It was FSD. But also we have Texas has the June launch of FSD unsupervised, right? So you do have other catalysts outside of the numbers that could keep it elevated. But the street's going to have to balance a potentially bad Q1 numbers with the actual thing that matters around Tesla, which is robotaxi that is going to start to launch. And so I think in the next coming months, we're going to have to weigh those against each other. Quick 101 options crash course. I did that a couple weeks ago. It's on the channel. So if you click on live and just scroll down, it'll say options 101. We did that crash course for about 3 hours. So if you're interested in options, that is on the channel. It's free to watch, and we'll have 201 coming soon for that. I mean, look, if Tesla did tank below 300, I don't think that many people would be too upset. I mean, that would be a crazy dip before the robotics sort of ChatGPT moment happens. Again, that's still my thesis on Tesla. Like FSD, I use it every day, so that's becoming part of the thesis, but it's the bots. The bots are going to be just and when the street starts factoring it in, I think everyone's going to be like, oh my God, why don't we have more Tesla? And I think it's going to be FOMO like we've never seen before, but it's a little far away. So if we could get a dip before that happens, I think people would take advantage of it. SMCI trying to go for 40, 39 right here, still up 7% on the day. How do you determine strike price and target date to mitigate your risk exposure? So it depends on what you're doing, right? If you're selling a put, you tend to pick deltas that are a low probability of getting assigned, which means, you know, if you're selling puts on Tesla, I mean, let's just do an example right now, right? So Tesla right here is at 360. If I wanted to sell a put on Tesla, which means what does it mean to sell a put? It means that I am bullish on the stock, but I do think that if it comes down, I would be happy to buy shares at a certain price, and I get paid to buy those shares. It's always 100 shares. If I go out a month to March 7th and I sell a put, I don't know, at 350, I mean, if it drops to what, 325, is that a crazy price? 325. The market's paying you 545 right now. So let's actually go to March 14th. That's a full month. So it pays you 720. So I would have put up 32,500 in collateral, 325 times 100. I get paid 720 a share. 100 shares means $720. So 720 divided by 32,500 is a 2.2% return, which means you're making 2% on that 32,000. And if Tesla does fall to 325 minus 770, your actual adjusted cost basis would be buying Tesla at $317. So it's one of those things of how comfortable are you with it going down versus it going up. Now, if you're buying a call on Tesla here, this is when the calls are cheaper because the stock is down. So the probability of it going up goes down, which means the prices of the calls also go down. And for this, I wouldn't be doing any short-term calls on Tesla. I would just be going to leaps. The June 2027s are out. So, I mean, there are plenty of opportunities to go out 2.5 years and get excited to buy calls, but you just have to be willing to hope that it can get above those strike price. Yeah, that's the option video. Thank you, Zocold, for that. For those that want to check it out, it is here in the description. So look, in terms of selling puts, you know, you go down 15 to 20%. If you think it's reasonable that the stock doesn't fall 15, 20%, then that's where you sell the put. If you would be happy buying it at that price, that's also good as well. And then in terms of buying calls, I wouldn't do anything short-term because Tesla's so unpredictable, but long-term, I mean, 400, 450 going out 2.5 years, I don't think is crazy for Tesla, especially if FSD and robotics starts to really scale up. And that's kind of how I would be thinking about it. Amit, have you sold any covered calls on your Nvidia yet? I have not. Let's do another example on that. So let's go to Nvidia. The covered calls have to be juicy today. So if we go to March 14th and I sell a call at 145, yeah, dude, market's paying $525 a share. So because I have 500 shares, I can make $2,500, basically $2,600 for selling the 145 call. And my average is 125, so I'd make $20 a share if they get called away. But given Nvidia was just at 140, I don't like that strike. If it gets to 140, then I like the 165 strike, 155, but not the 145 strike right here. What happens if it doesn't fall in the put? You keep the premium. Yeah, so if you sell the 325 Tesla put and it doesn't get to 325, you keep your 32,500 in collateral. Again, we got that number because 325 times 100. And you keep the premium, which was, in this case, $700. So you've just used the 32,000 to make 700, with the assumption of knowing that if it does fall to 325, you got to be a big boy and be like, okay, I am ready to buy these shares at 325. And I think that's where people also get confused on puts. It's like they sell the put to get the premium. And I've been guilty of this as well. But then the stock actually falls and they don't really want the stock. And that's why I think the number one way to protect yourself from a like toxic relationship with selling puts is you sell puts at a price you really are comfortable at buying it. So if you sell a put on Pltr right now at 100 and it dips to 100 and you're not comfortable buying it at 100, you're going to be annoyed, right? So it's one of those things where you just have to be okay with it falling to that range. And then you should be happy to get assigned because A, you can sell covered calls against those shares, and B, you should want to own that company long term. Now, if you're selling puts on GameStop for the premium, which are excessive, but you don't care about GameStop, you're going to be upset if you're assigned a bunch of GameStop shares. So I think that's kind of the philosophy to think of it. And where are you? I am in California. By the way, let me send the Telegram group again in the chat. For those that want to join the meetup, it will be on Thursday. I'll put the exact address later today in the Telegram group. And it'll be likely 5 to 10 p.m. in downtown Palo Alto. It might be not downtown Palo Alto. It might be somewhere else that's nearby. But if you're free after work, you can come by on Thursday. What else? So Netflix new all-time high. Wow, dude. Freaking Netflix. Not stopping. 1,032. Up 2%. Will you be on Berkeley's campus? Yes. All weekend I'll be on Berkeley's campus. I haven't been to Berkeley in 6 years too, so I'm kind of excited to see. It's been a while since I've been on the campus. This was the debate tournament where I got to finals in 2015, and then I lost in finals. So that sucked, but still, it was fun getting to finals here. Just could not close the deal in finals. I think I was 4th speaker in this tournament. This is like one of the biggest tournaments in the country for those that are into debate. Berkeley tournament and the Harvard tournament happened the same weekend. And Berkeley's just like a really big tournament. So it is a fun one, and there's going to be a lot of people from across the world coming to Berkeley this weekend as well. AMD getting a little bit of a pump, 110 up 2.8%, SoFi 2.6, Nubank 1385, Pltr still holding on to 114, 25 cents away. Oh no, we hit 115. Yeah, we hit 115 already. Let's see if we can get back there. And Tesla is still red, 360 on the day. If you have a bullish target price 3 to 6 months out that you feel pretty confident about, you can sell a put with a strike about 10 to 15% above that target with that expiry. Yes. So that's going synthetically long. That's selling an in-the-money put, assuming that the stock will get above that price and then be out of the money. That's not a horrible strategy either. It's just the question of how bullish you are. That's what I did with Robinhood, right? I sold a $45 put when it was 40, and I pocketed like 15 grand in January because Robinhood got to 51. But you just have to be ready to get assigned those shares if it doesn't go above your strike. Okay, guys. I think that's it. I think that is it for today. I've got some fun people I'm meeting today. It'll be on Twitter in the description. You can follow on Twitter. I'll be posting a picture with them. Some really cool folks. And I don't know if we're going to do the market close. Again, I'll keep you updated. Might not be able to do it today, but definitely we'll be back for the market open tomorrow and for the rest of the week. But we might not have a close today. It kind of just depends on if Jason has a studio, and that's free. That's it. We are here in the Bay Area. Got a lot of fun surprises this week. I think you guys will enjoy it. It'll be some good stuff. And yeah, then we will be back to New Jersey in a week. It is crazy that the market open is ending and it's 8:04 a.m. Like I don't even know how to make sense of that. It is 8:04 a.m. Like that's wild, bro. That is a wild. And I'm done with the market. That's just, it kind of is cool because it's like you feel so productive. Like you got so much done in the beginning of the day, but like it's only 8 a.m., bro. Like you have the whole day left now. A nap time? No, it's definitely not nap time. I gotta get ready and get out of here. But still, we got a lot to do later this week. All right, word of the day is striated.
Striated.
Okay. Marked with streaks or grooves. The butterfly's wings were striated with vibrant streaks of blue and yellow. In architecture, Doric columns are striated or fluted, but Tuscan columns are not. Okay, we're doing a different word. This word sucks. Let's pick a different word. This is ridiculous. Let's go to Merriam-Webster. Let's see what she's got. Vestige.
Vestige.
Of course. Vestige. A vestige is a trace mark or visible sign left by something lost or varnished. The ruins here are the last vestiges of the Roman occupation of this part of. I've heard this word before. This word is boring as well, though. Let's do another one. Let's see. Okay, here's the last one. Lysum.
Lissum.
Dude, I hate the vocabulary. I hate just words in general.
Lissum.
Like, am I the only one who thought it was lysum? Like, why do I see words and I just don't know how to say them? Like, it's like this is like the 80th time or something that I get this wrong. Lissum describes people or things that are slender, flexible, light, and graceful. If you watch long, thin blades of grass swishing in the breeze, they look lissome. They look like lissome dancers with swaying arms and torsos. Okay. Interesting. Lissome, dude. I'm calling it lysum. I don't care. All right. That's it. Thank you, everybody. Appreciate you guys. We'll be back. If not today evening, then tomorrow. We got a lot of earnings today. Tomorrow's going to be very important for earnings as well. There's nothing else crazy after the bell today. So nothing to really pay attention to in terms of earnings. But tomorrow, Shopify, DoorDash, Lyft, Upstart, Coca-Cola, BP, Marriott, got a lot of different stuff. Zillow looking at tomorrow. And then Wednesday, we got Robinhood. So that'll be a big one as well. Oh, and SMCI. But Chris and Matt will cover SMCI. All right. Thank you, everybody. Have a good day. We'll have some surprises throughout the week that you guys will see. And yeah, appreciate you all being here. I'll see you guys tomorrow on the Market Open. Bye, everyone. Have a good one.